Whether you're an experienced investor or just getting started.
Good morning, everybody. I decided to go on a little bit early. I think I'm the only person who brings up a live stream for market opening. What's this, like an hour and a half? An hour and a half ahead of schedule? It's because my dedication. I'm just so dedicated to you guys. Right. So, I am now dicking around with getting this all set up. I just wanted to pop in because I might as well. Okay, brain fart. Oh, guys, did you hear? Iran is threatening $200 a barrel if we don't back off. But Donald Trump also announced that we are going to build a brand new oil refinery in Texas. We haven't built a new one in over 50 years. I think that's right. I think that number's right. And we are also there's also reserves being dumped into the market to offset the rising cost of gas, which you're probably already seeing a little bit of at the store. All right, I just kind of closed out of everything yesterday without saving anything because I was pissed off because I couldn't get in on some of these trades. Nothing kills me more than seeing a beautiful trade. Well, one thing kills me more than seeing a beautiful trade I can't get in on. Watching that trade do well. That's the one thing that's worse. Ooh. Look at silver. Damn. Very interesting. The dollar must have the bed. I've got to close several things. Yeah. U.S. antimony, we talked about that yesterday. Excellent trade. Bitcoin pushing 71. I've got some news. I did a little bit of an analysis on Bitcoin. And suffice it to say, if we don't get up above 74,000 and stay there, we might be in for like a 63 to 68 thousand price point, just because that's a very strong resistance, but it was a very strong support before, and as you know, I'm sure that support and resistance are the same depending on what side of the line you're on, right? So supposedly once it gets above that, if it can maintain above that, it'll be very strong support. Next stop will be in the 80s. But yeah, it probably isn't going to bust above that, short of some kick-ass catalyst. So once it gets up to about the $73,000, $74,000 range, I think it would be an excellent opportunity to short. Shit, it might not even make it to the 71. I think that will, though, later on today. So in the aftermarket yesterday, oh, that's not accurate. That's, yeah. All right, is pre-market hours even open? No. Look at that. Look at that. Oil futures back up a little bit. It was at, what, $87 yesterday? That's because of Iran's threat, guaranteed. And, yeah, I guess we'll find out how good to their word Iran is, won't we? If they jack those prices up $200 a barrel, that's going to send this shit through the roof. God, I wish I could get in on this. I actually might be able. No shit. Damn it. Oh. I'd be able to get in on that if I had like an extra, I don't know, 60, 70 bucks. I don't know how much these futures, these oil futures are costing. Let's see. $92.51. Okay, not bad. Yeah, I think I've got a whole $1.30 there, but yeah, I am probably going to be about 25 bucks short of that. Let's see what happens. Alrighty, Roo. Let's go over to some news and see what the world is telling us. I am damn curious.
Highs that we've seen. Tom, just talk us through an example trade.
Yeah, you start looking at some of the numbers in the SaaSpocalypse that they're talking about. This is right in the crosshairs of what Adobe does. Their growth rates have started to slow. And you know, they're still growing. They're still a profitable company, but those numbers have started to pull back, so valuations have come in. So I looked at a strategy, takes advantage of higher implied volatility. The option market's priced in about a plus or minus just over 7% move. Either way in either direction, plus or minus $20. So looked at something that's a little neutral to take advantage of maybe some potential upside if we get a rebound here. But if the stock consolidates or even goes a little bit lower, I'm still protected to a point. So I looked at a customized four-legged spread here where I'm going to sell a near-term March 13th weekly put vertical. I'm going to sell the 255 put and buy the 245 put, so a short $10 wide put vertical that expires in 2 days. And then against it, I'm going to buy a 1 week wide call calendar to the upside that gives me that upside exposure on the 295 strike, where I'm going to buy the March 20th 295 call, sell that same 295 call in the near term March 13th weekly option. So it's basically two strategies, one neutral to bearish, and then the call calendar is actually a little bit bullish, where it sets up with that one standard deviation move to the upside if we get a move there. You're going to collect a credit of about 20 cents on this. So what does that mean? Well, if the stock goes to 310, 320, I just get to keep that $20 I collected on this. You can see here from the risk profile, the apex profitability at or near that 295 strike, but it takes my break even by collecting a credit all the way down to 254.80 to the downside on this one. So you got about a 7% cushion to the downside to get to that break even. Now, what you don't want to happen is maybe a 2 standard deviation move to the downside where it goes, you know, below 245 to 230, 225. That's where you lose about $980 in risk on this one. But this gives you...
It's not going to be all the tankers all at once. This is a very narrow strait, and it's going to be single tanker at a time. It's going to be very slow.
Coming up on the program, we'll catch up with Elson Kwan of Wells Fargo, Jared Cassidy of RBC, Nita Richardson of ADP, and Oksana Aronoff of JP Morgan. The third hour of Bloomberg Surveillance. Up next.
Let's see what Yahoo is saying. Actually, I want to go over to Fox Live. Yeah. Let's see what they're saying.
About what it really.
Oh, that's that BlackRock convention that's not even live. That was pre-recorded. Yeah, they had BlackRock sitting down. Well, looks like Fox got something else on the screen.
Look at this building. Look where we are.
America got where we are by boldly risk-taking and building big things. But we've done precious little of that in the last 20 or 30 years. We've made it just way too hard to build things. You know, NEPA, for example, we've just made it, it's very easy to stop something today. It's hard to do something big. And we need to change that. If we're going to win at AI, we need to massively grow our electricity production. And sadly, that's something we haven't done in a few decades. In the last 20 years, we've tripled United States oil production. We've doubled United States natural gas production. And we've grown electricity production by a few percent. I was just home in my home state of Colorado yesterday, and they're expanding a natural gas power plant. I'm excited to see that. And I look at the data, and Colorado today produces 0.4% more electricity than it did 8 years ago.
I'm telling you guys.
There's a lot of money and a lot of time.
I'm telling you guys, right now, these crude oil futures might be a pretty good buy with Iran's threat. Because even if they don't do it, the market still reacts to these things. So seeing where it's fluctuating in this little channel right now, I would give it a minute, maybe. I'd give it a minute. Maybe it's going to come down a tiny bit more. But that's all right. Let's go back to what we were listening in on.
Well, first of all, I agree.
This is a BlackRock. They are having a little convention. I don't really want to sit there and that, to be honest with you. I know what they're going to talk about. World domination. That's what they do.
Crude briefly touched the $100 barrel level before easing slightly, while U.S. crude climbs this morning above $92 a barrel. The move comes after some cargo ships were struck overnight near Iraq. And
oh, shit.
UAE, raising
I did not know that.
About disruptions through the critical Strait of Hormuz. The International Energy Agency says the conflict is impacting about 7.5%.
I did know that there was a Thai ship that was running through there that got attacked because, according to Iran, they broke the law by trespassing. But Thailand doesn't give a... That's why I'm moving there. First chance I get.
On conflict could disrupt global energy supplies. Now, the U.S. has also moved to ease supply concerns, with officials announcing a significant release from the Strategic Petroleum Reserve. Investors are increasingly worried that higher energy costs will inflation and complicate the Fed's path on interest rates. Meantime, shares of Dollar General under pressure in early trading after the discount retailer issued a sales outlook that is tempering investor enthusiasm after the stock's strong run. The company did beat quarterly estimates, posting revenue of $10.9 billion with same-store sales rising 4.3%. That was helped by stronger traffic and bigger transactions. Margins also improved as the retailer benefited from better inventory management and lower shrink.
What the hell are you talking about?
Where futures
what
are
kind of run are you talking about?
Session.
It's sucking it.
Pressure. S&P minis off by 0.5%. NASDAQ 100 futures, same performance on a percent basis here. Dow futures lower by about 0.75%. Small cap futures off by 1.25%. A touch above that. Let's bring in Kevin Green, senior markets correspondent, right away to help set up the action today. All right, KG, it seems like the tone is being set by oil once again. Listen, I did think when they announced that historic amount of oil to be released by the IEA, I thought that would have some impact. It seems like it didn't have any. Can you take us through how to interpret all of this?
Well, I think the impact that we saw was very short term. I think a lot of energy traders did see this on the horizon as disruptions within the Strait of Hormuz, as well as production in some of these Middle Eastern countries, are continuing to be impacted. And so we did see this release that was announced by the IEA, 400 million barrels. It's the largest one that we have seen from the conglomerate of countries that comprise of this organization here. And this will kind of trickle over the next couple of weeks. It does sound like Germany and Japan will start their release probably Monday or Tuesday of next week. and we will see other countries kind of follow. We have seen the United States also confirm that they are going to release 172 million barrels from our own strategic petroleum reserves.
That'll last a little bit.
41% of our total inventory at this point in time. It's going to take around 120 days for them to release those reserves. You're looking at around 1.4 million barrels per day that's being calculated. That, I would say that's a little bit of a stretch goal. If you can get to 1.1, 1.2, I think that would be a little bit more feasible, but 1.4 is the goal from the administration to be able to try to dampen down energy prices, as well as making sure that there's enough feedstock there for refiners to really be able to put the byproducts back into the...
How is it that we only go through that small amount of oil every day when worldwide the entire world uses about 100 to 150 million barrels per day? How are we using less than 1% than the rest of the world? I mean, our GDP floors the next, I don't know how many countries. And then our military budget is more than the next 5 countries combined. So how do we only account for 1% of the total world use of crude oil? That doesn't make any sense. But I'm not the brightest bulb in the bunch. If you happen to know, by all means, educate me. That's what we're here for, baby. That's what we're here for. It's never a bad idea to admit when you don't know something, because that is that's how you learn. If you're one of these people who has a hard time admitting when you're wrong, you got some growing to do. But let's go back to whatever the hell they're talking about, these talking heads.
Mm-hmm. So, Secretary, right, as someone who lives and breathes energy, I see how these data centers can help reduce costs for consumers. But if I'm not an energy expert and I'm one of those consumers...
Look at this. The most highest gain in the market. 1.3 million %. Okay, that's roughly a 13,000x. Drazcana. I'm going to guess that's a cannabis company. I would advise heavily against investing in any of these kinds of crazy gains. Obviously, they've already made their gains, right? But the less obvious part of it, where the hell are they talking about? The less obvious part of it is most of these companies that you see right here doing ridiculously well. All right. That's their dividend. Excuse me. No. Yes. No. Yes. No. Yes. Yes. No. I don't know. Anyway, that's still a ridiculous number. I don't care what bracket you want to put it under. Mostly, the hell is the word I'm looking for? Generally speaking, I'm an idiot. You see numbers like this, there's only a couple of things possible. Manipulation, fraud, or they're being pumped up by one of these stock tips companies. You know, you've seen them. Sign up for our list every morning. If you haven't watched my video where I tore that BS apart, listen up, because that's what it is. It's BS. See, what they do is, when you sign up for one of these lists, what happens is they've been contracted by the companies that they give you ticker symbols for. They've been contracted to boost their stock. They promise them, hey, we'll make your stock run in exchange for this, that, and the other. What they usually get in exchange, 9 times out of 10, they're getting stock shares. They're getting shared a whole bunch of shares in exchange for their services. And what they do is they go ahead and they secure their shares a couple of days before they give you the stock tip. And then they send out their stock tip to however many thousand people are signed up for this BS. And then they create a sense of urgency by saying, get in on it quick. And then a lot of times they don't tell you the stock ticker symbol until like 5 minutes before the opening bell. So you don't have much time to think. You're panic, buy. And in the first 30 minutes, all of those morons who got those alerts, they drive the price up. And the person who was doing the sending of the list sells their shares, taking your money and running off with the bag. And you might get lucky and cash out before that happens, but 9 times out of 10 people who sign up for those lists aren't too bright to begin with. But on the other side of it, that's a hell of a business model. Yeah, and I'm not pulling that out of my backside. I know that happens to be a fact. So don't sign up for those stupid lists. Stock tips in your email or sent to your text. Don't fall for that. Just don't. Save yourself some trouble and just do your homework. I know it hurts to do a little bit of legwork. I know you'd rather go into the Wall Street Bets group on Facebook or X or wherever and ask, what are we buying today, guys? What are we buying today? And then just jump into it, not knowing what you're doing, just trying to ride somebody else's hard work. That's lazy, and you deserve to lose your money. No, I'm just kidding. I hope everybody gets rich. Genuinely, I genuinely do.
Next Gen and Markets correspondent to get a closer look at a couple of earnings movers in the retail sector. So we've got results from Dollar General and Dick's this morning, Dick's Sporting Goods.
Dick's.
Let's start out with Dollar General since that's having a bigger
Dick's are doing really good, guys.
Market. Take us through your takeaways.
Well,
Dick's is a great buy.
Dollar General is always such a great report because it does give a great read on like
if you know anybody
America, which frankly is
that'd be interested in some Dick's,
the country, and so
I'm selling Dick's.
Signal that we are seeing still a consumer seeking a discount, and that is of course really what's made them fairly resilient just over the last year or so. But we did see, as far as their fourth quarter performance, net sales rose 5.9% to just shy of $11 billion. Same-store sales also rose by around 4.3%, driven by this boost we saw with higher traffic and higher average tickets, showing value right now as consumers continue to really trade down. Profitability also rebounded pretty sharply in the quarter, with operating profit up over 100% and earnings up more than 120%, reflecting this better expense control, improved shrink, as well as just facing easier comparisons from last year. Full year results were also solid, with sales up about 5.2%. And also we did continue to see, operating cash flow was 20%, giving them, again, more flexibility to further invest in their supply chain as well as their shareholder returns. So management struck a more constructive tone, though, on 2026 around, again, pricing inventory as well as availability shrink reduction and store execution, which they did say are gaining some traction in more of these rural markets, especially where they do remain still a dominant force. And this is one of those names that, again, has such great exposure because there's almost 21,000 Dollar Generals across the United States. So as far as what the bearish takeaways are, growth does still remain heavily driven by consumables, which supports traffic but does limit some of their margin upside. Margins did improve in the fourth quarter, but they do remain relatively below some of the longer term targets. As we know, this name is, of course, sensitive to wage inflation and freight costs, as well as just right now the global pressures. But store closures and portfolio optimization also do continue to dampen some of their growth expectations. And they mentioned the fact that while they're seeing this resiliency from their overall consumer health, they are right now dealing with a consumer that is frankly, more price sensitive, and the longer term margin recovery story will see this sustained improvement. But it does seem like we are still a bit a ways from being able to say that, we could expect consistency from this name every quarter, just because, again, they do have a great read on. There's some great fact today, and that I wish I could think off the top of my head, but it's like every American lives within 5 miles of Dollar General. And so I do think this gives a great read on just broader inflationary trends, frankly, still weighing on us as consumers.
I do remember that. I think that's accurate. I've heard that statistic before. So let's talk Dick's Sporting Goods and your takeaways from its quarterly report card.
So I will say Dick's Sporting Goods continues to, frankly, impress on its earnings, where I feel like we go into these reports fairly grim, especially with anything right now that is consumer discretionary focus. But fourth quarter results did pretty easily beat, with earnings, well above expectations, and also reflecting some strong holiday execution and just demand. So their core business does still remain very healthy. We saw comp sales rise 3.1% and 4.5% for the full year, driven by gains in both their average tickets and transactions. Their 2026 outlook does imply continued growth, with their core business guiding for around 2 to 4% growth, and consolidated earnings also expected to be more confident than previous estimates. And so as far as some of these experimental formats, they did say this House of Sport and other new types of concepts are going to have more openings, and they're planning.
Just like a bunch of women sitting there doing nothing but talking about dicks. Let's see what Fox is saying.
They would have prayed different. They would have voted different. Yet it's that individual lying on the side of the road, bruised and beaten, that people who look like him, pray like him, and vote like him walk right past him.
Yeah, what does that have to do with my cash?
It could be a big hole to dig out from.
Yeah, I want to talk about a little bit about the product strategy pivot that it's actually going even more premium.
Crude's on the way up,
EVs,
baby.
The battery electric vehicle market is characterized by intense price competition, which we will not follow for the economic and brand relations, and that's a quote. What's being added instead is models positioned above existing two-doors sports cars and the Cayenne SUV. I think a lot of people are kind of wondering, well, at this point, maybe they ought to step back from the premium.
I am going to go have a smoke. We got about an hour and change until market actually opens. If anybody has any preference of what you'd like me to leave on the screen, well, shit, there's like 80 of you in here. I don't want to run out on you. What we are doing currently is just checking stuff out, waiting on the market to open. Got a little over an hour. If you just got in the video here, we've got crude oil, probably a damn good play right here. Iran threatening to jack up the price of oil. It is currently at $93 a barrel. They're threatening to jump it up to $200 a barrel. If these futures prices double, okay, and you drop $100 on one contract, and it 20x's, well, dude, you've got 10x leverage, depending on where you're trading. If you have 10x leverage, okay, you're going to profit as if that $100 was $1,000, right? So for every dollar it moves up, you're going to get $10. So if it doubles, let's say it just goes to 150. The hell with the 200. Let's just say it goes to 150. Well, that's almost the double, which another $50, that's a $500 profit off of your $100 investment. Now, make sure you understand how liquidity works. If you don't, I made a video about that yesterday, about knowing what leverage and liquidity is in a video under 60 seconds. I'll go ahead and tell you now. When you're using leverage, let's say, for the sake of making the math easy, let's say you're using 100x leverage on anything you're trading on, all right? That effectively makes, if you have $1,000 into it, that makes your $1,000 worth $100,000, okay? Now, since your part of that whole trade is only 1% of the total notional value, then you will get liquidated if the price of what you're investing in goes down 1%, because you can't cover more than 1% of the total trade. So you lose all your money. That's how people get liquidated, and they don't understand why. You've got to have a liquidity pool in the same account. You have to have extra money that's not invested in anything to act as that liquidity buffer. So if you wanted to instead guard against, instead of getting liquidated by the value of your investment going down 1%, if you want to say change that to a 10%, then you need to have 10 times your investment sitting there uninvested to act as the liquidity pool. So if you wanted to guard against a 10% fluctuation, you would need $10,000 in addition to your initial $1,000 to act as that liquidity buffer. That's how that works. So hopefully I've cleared that up, and hopefully I've saved you some money. Because, yeah, a lot of people jump right in, don't understand how that works. And the first time I played with any kind of leverage, I had no clue. And I lost $500 in like 30 seconds. Yeah, if you've ever traded with leverage and gotten liquidated, and you don't understand why, you probably think it's a scam. Well, hopefully I just helped you understand and guard against that happening again. Now, as previously stated, I am going to go for a smoke.
The trading day.
I'm going to leave you with Bloomberg. And yeah, you guys be thinking up some trades. Comment in the chat, would you like me to look up? Being that it is almost a little over an hour before the market opens, if you just got in, back up about 2 minutes and listen to my rant about liquidity, and just hang out. We're just waiting on the market to open, and I'm going to take advantage of that by going to have a smoke.
Bloomberg. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
The private credit side is really interesting because that would have been the dominant story this week. Maybe it still is. And there are echoes here of 2007. That could spill into public credit markets. And if that happens, then you're going to see bonds in the government sector get bid. And bonds will start performing better than swaps and better than credit.
We'll come back to that story in a moment. Steve Major there of Tradition Dubai. The story at the moment in the equity market, negative by about 0.6% on the Russell. We're down by 1.3. In the commodity market, crude, new highs overnight. New highs, I say, relative to where we have been the last couple of days. The high, of course, of the week, 119.50 on Brent. The high overnight, north of 100 again in triple digits, 98.64. We had a statement from the state-affiliated broadcaster in Iran saying that we could get a statement for the Supreme Leader, the new Supreme Leader, any moment from now. So we're on standby for that, with crude elevated up by more than 7%.
So waiting for this statement, we have not heard from the new Supreme Leader. His father was killed in a strike, the former Ayatollah. And there's been all this speculation. Is this individual even alive? Yesterday was a report that he was injured. So this is going to set the tone potentially for the direction and how long Iran is willing to continue fighting this war.
When we get that statement and those headlines, we'll bring them to you, of course. Let's get you some morning calls. First up, Jeffries lowering its price target on Delta, noting a steep rise in jet fuel prices. Your second call, Wells Fargo, double upgrading Occidental to overweight, believing the energy giant can resume an accelerated growth trend in 2027. And finally, Piper Sandler raising its price target on Exxon to 186. The analyst revising estimates on the back, guess what? Higher crude. That stock is up by 0.75%. Let's turn to the financials. Morgan Stanley and Cliffwater limiting redemptions from multi-billion-dollar private credit funds. This coming as the firms grapple with waves of withdrawal requests. Herman Chan of Bloomberg Intelligence joins us now for more. Herman, we've seen one after the other, and maybe there's more to come.
That's right. There's a lot of questions on private credit and the interconnectedness with the banks, and that's really what's driving share price performance over the past few weeks and months, is that there's still a lot of questions on what's going to happen within the private credit complex and questions on how banks will be affected given their exposures to these non-bank financial institutions.
Herman, we've seen some of these names, Morgan Stanley, Goldman Sachs, deliver fantastic earnings in Q4, and the stocks were really outperforming within the financials. They've just started to trade a little bit softer more recently, Herman. Why are they getting caught up in this in a bigger way?
Yeah, I think what you can point to is that the increased volatility is the enemy for lots of businesses like IPOs and M&A. So heading into the year, there was lots of enthusiasm that investment banking activity would ratchet up higher this year, given the fact that we have a big backlog in IPOs and also increased M&A activity given the deregulation efforts of the Trump administration, and also potential return of areas like private equity putting their portfolio companies into the public markets. Given the volatility we see today, a lot of that's on pause in our view.
Herman, good to see you. Herman Chan there of Bloomberg Intelligence. To build on this, Jared Cassidy of RBC Capital Markets. Jared, thank you for joining us, sir. Do we have a problem here?
John, yes, there will be some issues, no doubt about it. The private credit problems are likely to continue because of what's going on in the marketplace. But the real question then is, what's the impact of the banks? The banks have some exposure to some of the private credit players, but this is nothing like what we saw back in 2008 and 2009 for the banks. The other thing too, John, we got to remember, when you look at the total private credit markets, it's about a 1.7 trillion globally. And when you think of what happened to the price of crypto in the last, 6 to 9 months, it's lost over $1 trillion of value, and nobody batted an eye. So it's going to be an issue, no doubt about it, but we don't see it as a systemic issue like the subprime crisis was.
Is there a bank, Gerard, that you think, or a class of banks, whether it's small, whether it's medium, whether it's among the largest, that you think is most exposed, not just to the private credit story and to form of credit lines and direct lending themselves, but in the form of sister asset classes, whether it's software assets, whether it's similar types of lending that might come under pressure in response, in sympathy to what we're seeing in private credit?
Lisa, it's an interesting question because that's what we're all looking for, of course, is any second derivatives from a private credit disruption or meltdown, whatever you'd like to call it. And right now, specifically on software, the exposure to software companies from a loan portfolio for all the major banks is very minimal. So it's not something that we're too worried about. Could there be idiosyncratic pop-ups of credit losses? No doubt about it. But you're asking a good question because it's the loans to non-depository financial institutions where some of these loans lie, and the transparency is not very clear. It's getting better. I think you're going to see better transparency on the first quarter earnings calls, but the banks will tell you that the structures that they're lending into are very senior AAA tranches. So we're not too concerned of any material losses for the big banks. And again, they've been so de-risked since the financial crisis that they'll be able to weather any storm that comes from private credit, in our view.
We did see, though, some concerns after Silicon Valley, particularly with regional banks, about some of their lending portfolios. Putting aside just private credit and specific liquidity concerns, with an oil price shock, there is a fear that liquidity concerns could be paired with real credit concerns if the economy were to deteriorate. Do you have a sense of whether there are pockets of potential pain within the banking system that would emerge in that type of scenario?
It's interesting because the Silicon Valley failures, First Republic and Signature, was so unique. You might recall, Lisa, these companies relied on the uninsured deposit source of funding, and that's what put them out of business, the liquidity problems back in 2023. They were unique. No bank is set up that way. So from a liquidity standpoint, even if price of oil stays over $100 a barrel for an extended period of time, we're not that concerned about a liquidity crisis. However, you do touch on something else, which is credit. So if somebody's forecasting $100 oil for 6 to 12 months, that's likely to lead to some credit issues, particularly at the consumer level. But you would have to have real confidence that that was going to happen. We don't believe that's going to happen. We don't know, though, for sure. But I think if you look at the current state of affairs, we just finished our 30 annual Financial Institutions Conference yesterday. Every bank that presented, first quarter results are going to be good. Everything is on track. So we'll see how this plays out.
You still think the banks are a buy, Gerard?
Yes. In fact, John, I think this is, you know what? It's interesting, John. This reminds me of Liberation Day. You remember last April, and the bank stocks got hit real hard. And assuming, of course, this Middle East crisis does not extend out for another 9 or 12 months. But if we clean this up or dials back in the next 4 weeks, yes, they're definitely a buy.
There we go. Gerard Cassidy there of RBC Capital Markets. The week of Liberation Week, bank stocks were down something like 14%. Then it bounced back and rallied aggressively from there, as did everything else. But is this really the same as what we saw last year?
I kept thinking in my head, conditioned by experience. This is a market conditioned to not miss out. This is a FOMO-driven market, not exactly one driven by fear. And it's the reason why maybe you're not seeing the scope of the sell-off that you saw in the wake of Liberation Day, because there was a policy response, which is the reason why we keep going back to, is there a clean policy response to this in the same way as in April? And increasingly, the answer is a resounding not at all.
In April, there was only one party waging war. There was no retaliation. It was all in the president's hand. This time around, very different.
You said it best yesterday. It was a lever Trump can pull up and down. He cannot do this here as much as they want to. They cannot even at this moment escort a tanker through the Strait of Hormuz, which is the choke point right now. So no, and everyone that's bullish has an asterisk. Well, it depends how long this lasts.
Weeks, We hope it's weeks now and not months. Things are changing slowly. Coming up on the programme, the latest jobs data, claims set to report in just about 4 minutes' time. We'll get Nita Richardson of ADP with us in just a moment.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more.
We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Tracking a few things this morning, a state-affiliated news agency out of Iran suggesting we could get a statement any moment now from the new supreme leader, so we're standing by for that. In the equity market, going into some jobless claims data, equity futures are negative by about 0.6%, down by 1.3 on the Russell. In the commodity market, 119.50, the high of the week so far. That was Sunday evening. Overnight triple digits once again, and Brent crude not too far away at the moment, 98.60 and up by more than 7%. We'll get into that in just a moment. Let's talk about the economic backdrop, the jobs market. Mike McKee has more. Morning, Mike.
Good morning, John. Well, the low-fire economy continues. We're at 213,000 for initial jobless claims last week. That's down from a revised 214,000 the week before, and it's just about where we expected to be. So it doesn't suggest that companies are giving up on their employees yet. Continuing claims, 1,850,000. That's down from 1,871 the week before. Other numbers out, a smaller than expected trade deficit for the month of January, negative 54 $74.5 billion. That's down from negative 72.9 in the month of December. Imports were down by 0.7%. Exports up by 5.5%, suggesting there is some tariff effect at work there. Housing starts are out, and they are up 7.2% in the month of January. A big surprise. The anticipation was for a decline of 4.5%. Bad weather, of course, one of the major culprits. Building permits were down 5.4%. The expectation was for negative 3.1%. So more pessimism on the side of builders, but not as much of a weather impact as people thought. So some overall really pretty good news for the economy given where we are at the moment.
We'll take that, Mike McKee, without a doubt, particularly following that dreadful payrolls report just last week. Michael McKee there breaking down jobless claims, coming in at 213,000. The estimate was 215. Claims have been really, really stable. And I called it a dreadful jobs report, but over the last 12 months, if you stripped out healthcare, it is pretty ugly out there for hiring.
We would have been in a jobs recession of sorts in a lot of different industries. We've seen a lot of people struggle to find jobs in terms of the time, but the amount of firing hasn't really picked up, and there is this equilibrium because of an aging population and a lack of immigration. I just wonder if this is a good thing or if it just adds to the complication of what we're talking about, certainly for the Federal Reserve. Is there enough here for them to potentially cut rates, be more sensitive to the job side of the market, given the inflationary shock, at least in the near term? And ultimately, the market seems to be suggesting not so much based on the fact there's only one rate cut priced into the market for this year.
Equity futures going into the opening bell about an hour away, negative by 0.7% on the S&P 500. In the bond market, turning to fixed income, yields down by a basis point through the curve, 2s out to 30s, 10s are down about a 1 basis point to 4.21. And of course, staying on top of crude for you, Brent 98 and up by close to 7% on the session. Nita Richardson of ADP joins us around a table here in New York for more. Nita, good morning.
Good morning.
The labour market. Let's just start with the labour market, then we get to the broader economic backdrop. Just how fragile are things, particularly the insight that we got from the payrolls report over the past week?
You know, John, this is a peculiar time because it's a time when you have to separate a pretty strong labour market with very weak hiring. They are two different things. And if you look at the hiring we've seen, it's been concentrated in certain industries. And so the labor market overall, Mike McKee just reported it, there's very few firings, there's very few layoffs. We're at historical lows. It's pretty strong. It's pretty robust when you look at pay gains. But the hiring is weak. The uncertainty is leading firms to be more cautious. And that is the distinction that is hard for people to get their minds around.
Do you expect those two differences, those conditions to reconcile?
Eventually, sure. I mean, we're actually seeing at ADP a pretty solid hiring path. We reported on Tuesday that as of February 21st, hiring was tracking over the last 4 weeks at about 60,000, which was in line with what we said for the February ADP report. That's very different than what the government is showing right now with that February report. But what you're going to see, I think, is a lot of choppiness. The reason why the markets didn't really respond to this low number for February from the government payrolls is that they averaged January and February, and they got right around what they expected for that 2-month average. And that average is the point for the markets, but it's not the point for Main Street. That volatility matters a lot. And if we are indeed seeing huge swings in hiring from month to month after it's been seasonally adjusted, that is not a great place for workers to be right now.
There also is a sense that a lot of this hiring, as John alluded to, is really concentrated in healthcare. It's concentrated in a couple of industries that are counter-cyclical to any kind of economic growth. Do you see any expansion, broadening out, a sense that this is a broader hiring that can take place eventually when there is some sort of emergence from the stasis?
You know, we actually saw a broadening out in construction jobs, and I think that's a great signal. I mean, you're building forward. Even the housing residential starts that Mike reported showed a bit of signs of life in a cold winter. But that data center investment, that building out of the infrastructure, it is happening. And it's happening at a time when interest rates are where they are, and there is a lot of uncertainty. The physical environment is still moving forward. And I think that's a great sign to hinge like the platform for what's needed for this AI boom to actually take off.
What does this look like if you impose $100 a barrel oil on this backdrop? Does it curtail this? Does it stymie it? Or does it allow just growth at a slower pace?
You know what? Another interesting part about the labor market right now, and I think markets in general, is that people are able to look past one-off things. And I'm not saying that this oil price conflict is one-off. I'm just saying they can look through $100 oil and maybe see a future. They can look through higher inflation. They can look through a weak jobs market. They can look through high deficits and high debt.
I gotta get some coffee.
What's hard to look past is the crosswalk between all these things. The multiplier effect of higher oil and higher deficits and higher bond yields on the 30-year, which increases long-term borrowing costs. All of that is hard, especially if you're a small business. And that is where we're seeing the bulk of the hiring right now. It's hard to look past the intersection of all these areas of uncertainty. And I think that's what's going to lead to more choppiness in hiring going forward.
Well, to Lisa's point, just before she asked about oil, you were talking about an expansion in construction working and that sector. Doesn't this potentially put a halt to that if this is a prolonged crisis?
You know, yeah, it does. And energy is driving this boom. Energy drives AI. That AI investment is already slowed by how resource intensive it is. That's why the infrastructure needs to build out. And then I was on Wall Street Week just this past Friday talking about the labor market that is needed to fuel this investment infrastructure boom. It's retiring right now. So you're not...
I've got some funny information I'd like to share with you guys. Everybody knows about the super chat function on Rumble and on YouTube, where you can send the creator money if you want, right? Well, I don't know if you know this, but YouTube charges like somewhere between 30 and 40%. Whereas Rumble only charges 20%. That's still a lot. You'd think they make enough on advertising to not tax their creators 20%. Like that's outrageous. But, you know, what are you going to do? That's why I put this here QR code up, because if you happen to want to send me a tip, I'd much rather you prefer you do it that way, because, yeah, that'd save me 20%. But, you know, it's whatever. Anywho, what's old Fox News? Oh, yeah, hey, I got some news for you. The IEA plans to release 400 million barrels of oil reserves. That's in addition to the United States releasing, what was it, 100 or was it 150 million barrels? They said, or am I getting it mixed up? Yeah. I'm seeing the SpaceX IPO coming up more and more in discussions. And, yeah, if you've been here for what I've been doing, talking about this old SpaceX, I found what I believe are the 6 best suppliers of SpaceX, and I've put them on this here list. You've got Broadcom, you've got ST Microelectronics, you've got Astronics, great name. Of course, you've got NVIDIA. And these two are actually the same company. I just don't know which one would be the one that applies, because they're both South Korean companies. Bastille Holdings. It's probably Fine Bastille. It's probably this one. This is probably something to do with their finance. Then again, I don't really know. At any rate, you'd have to invest through the South Korean stock market, and there's an exchange rate on their currency, which you might be able to double whammy it, depending on what rate you get on the exchange. But you can still go with the leading 4. Now, SpaceX has over 2,000 different companies that they deal with. Some are listed on the stock market, some are not. But these are the highest likelihood, in my opinion, of companies that will do quite well upon the IPO. So if you ask me, in my humble opinion, not financial advice, these would all be excellent investments waiting on the run-up to that IPO. I wouldn't do any option play on any of them, aside from Nvidia maybe, because they've got other things going on. And of course, you know, Broadcom is definitely a good company. They've always, generally speaking, they've always done fairly well. They got their hands in more than just SpaceX. Let's pull them up. But yeah, I find it funny that SpaceX buys the majority of their steel and metals from a South Korean company. They don't buy American. So, they must be getting a good deal. Elon Musk is anything but stupid. Yeah, you know, I've been talking about Broadcom, and as you can see, they've been on a fairly steady decline, but don't let that fool you guys. Don't let that fool you. All these companies on that red list of mine, all of them are going to benefit from the IPO. You bet it. Bet it. Woo! Look at the dollar. Making a big deal over 25 cents. It's funny to see silver. Oh, no, that's the week. Let me get back to the 5 minute on it, baby. Oh. Somebody drop some ticker symbols. Would you like me to check something out for you? Drop a ticker symbol in the chat. I'll be glad to pull something up. As soon as I pull up the chat, so I can see whatever you say. What the hell? For some reason, the YouTube chat's not popping up on my thing. Let me see if I can pull it up on a browser. Yeah, anybody have any stock picks or crypto picks they want me to check out and analyze? I'd be glad to. You just gotta drop it in the chat. Ya poof. Okay, yeah, if chat's fine on the browser, it must be an OBS thing. Yeah, unless I get an alert that makes noise, I'm likely not going to see your comment on YouTube. I mean, I'll check it periodically, but typically OBS would let me do it in the app, but it's being stupid. I'll tell you what, I'll try. All right. I should be back. Yeah, OBS is always giving me trouble. It's always some sort of, like, it always freezes after a certain amount of time or something BS. And it's not my computer. It's a brand new $1,000 laptop. It's a $1,000 gaming laptop. So it's not on my end. Anyway, problem solved. Let's go over to Schwab, see what they're talking about. Where's my cash, Schwab?
Right now, we need to discuss funding the federal government, getting more TS agents back to work. There's so much uncertainty right out there that's going to lead into
uncertainty.
Volatility. But underneath the surface, you're going to still find those growth opportunities I spoke about earlier.
I love that you brought us some opportunities because people
Happy
like,
to help.
yes, because people like to find opportunities and glimmers of optimism in turbulent times.
But being realistic, there's going to be
Absolutely.
more volatility, but there's still opportunity for growth and income out there.
All right, so we have to think about the downside risk as well. We'll leave it there. That is Kevin Mon, President and Chief Investment Officer of Hinian and Welsh Asset Management. Coming up, it's time for Options Corner. We'll chart and trade Adobe ahead of earnings. Those come after the close today. Morning Movers will be right back.
And I'm going to slide on over to Fox. Nope, that's where I was. No. See Yahoo.
You no longer just have to look at NASDAQ.
Oh, no, Bloomberg.
Curbing these higher prices, as just this week we saw retail gasoline hit its highest level under either of the Trump administrations. The thing is, there are real questions about implementation, timeline, and what will actually curb costs for American consumers. Bloomberg News had reported yesterday that President Trump is mulling even invoking the Defense Production Act emergency powers that could help spur offshore production off the coast of California to help boost some domestic supplies. The president has also floated, according to our reporting, the potential of asking Congress for a federal gas tax holiday. We also know that he's considering waiving what's known as the Jones Act, which puts restrictions.
Man, that's just smart. Tax holiday, every little penny he can save us, that's just smart.
Options here. President Trump also previously floating earlier this week that we could see some more waivers when it comes to oil-related sanctions, though he didn't really specify beyond that he spoke with Russian President Vladimir Putin. But, John, as you well know, this is just heightening the political pressure on the president as we head into the midterm campaign season.
Tyler Kendall, thank you, Tyler.
Yeah, and excellent timing on the president's behalf. Boy, he's doing everything he can to make sure he, prevents Democrats from stealing an election, huh? Everything he's done. And he's got the best point I've heard him make about voter ID is that the only reason you would be against voter ID is if you're cheating. There's no other reason. There really isn't. Like, why would you be against? Why would anybody be against making sure that every vote is legit? Like, I'll tell you why. Because something Donald Trump. That's it. That's literally it. Bias. That's all it is. And if you know me at all, you know how I feel about bias. It makes me sick. On both sides. And both sides do it. Both sides have their biases. Both sides allow those biases to cloud their mind and cause them to see through a lens. Because I'll admit, whenever I see a hit piece write-up on Trump, I'm instantly inclined to not believe it for multiple reasons, but mainly because I don't want some of the bad things to be true. But I still maintain intellectual vigilance, unlike the majority of people. People who are scrolling on whatever social media app that they're on, just blind to anything that conflicts with their biases. And then on top of that, most people just look at headlines. And then you've got the poor suckers who believe the BS they see on social media. I made a video a few days back, last week sometime, about how I've been noticing on Facebook in particular. It's what inspired my video on intellectual vigilance. What I'm noticing are many groups that are creating these write-ups, and in the top line it says breaking news, and then it's usually either complete BS or it's a serious exaggeration. I've seen these write-ups on both sides of the aisle, for and against Trump. But the odd part about it is the writing style. I'm a writer first and foremost, okay? Always have been. I've always enjoyed writing. I am a writer at heart. So I notice little cues and little things that perhaps a lot of people who aren't writers don't notice. So believe me when I tell you, I've noticed some really strange similarities in the writing styles of these BS write-ups. So, it has to make one think. That's influencing what you believe is big business. Believe it. It is. The powers that be have a vested interest in what you believe. And of course, the divide and conquer trope, being alive and well as it is, it works quite well. People are way easier to influence when you chop them up into little groups. So, I can't prove it, but I would bet that all these BS write-ups that are BS on both sides, left and right, I would not be surprised if they were all generally coming from the same people whose only interest is to make you mad and influence your thinking, have your head so full of BS that you don't know what's right and what's wrong and what's true and what's not true. So, that being said, be intellectually vigilant. Question every story you see in the news, even from mainstream media outlets. If you are one of these people who actually believes in mainstream media, be vigilant. Even if you want the story to be true, question these things, man. Question these things. The only way you can really get, the only way you can have a hope in knowing the truth, as the peasants that we are, the only way you can ever hope to have a clue is to take in as many media sources as you can and then look for the common denominator. Look for that thread of truth. Pay attention to the exaggerations and check your bias at the door. I try and stay right down the middle. Politics these days has made it very difficult because, to a leftist, actually to anybody who's hard left or hard right, you agree with one thing on the other side and they want to throw you in that camp. There's some things about the left that I agree with, and then there's more things on the right that I agree with. I'll tell you that much.
As we're coming up against Iran's offensive, drone capabilities, why do you think the U.S. hasn't sort of adopted more of these counter-drone practices that have been so effective? And does Congress need to assert itself more to sort of prompt DoD to do that?
Yeah, for sure. And it seems to be where we're struggling the most. I mean, different point of view. This war so far has been highly effective at wiping out Iran's ballistic missile stockpiles, at further decimating their enrichment of uranium and their pursuit of a nuclear weapon, which is the big goal of the mission there, of taking out at this point 49 of the leaders in their regime. So in that regard, we've been successful, but the area where we're struggling is against their drones. I will say, when it comes to counter drones, Camp Atterbury in Indiana is a key testing site, along with Crane. So there are investments, there are things being done there, just not quickly enough. But on the, one area of progress that I have seen, Ruben, is the Lucas drone, which looks a lot like Iran's drones, which, by the way, were tested at Camp Atterbury in Indiana, and they're making them in Arizona. That's the kind of progress that we learned from Ukraine, from Iran, and you can build them at a fraction of the cost of anything else in our fleet, and deploy them quickly. And there are some good examples and all of that, but I think you're right. The NDAA has to tackle the counter drone subject, and something that we're working on.
I also think we also probably have to start thinking about drones in different ways. I think we kind of put them all under one category. I mean, I think some drones we should think about more as munitions than anything else, and need to kind of stockpile them in that way versus, thinking about them as platforms. And if we do that, then we're going to, I think, be on the right side of a shootout. Right now, we're not on the right side of a shootout because I think we haven't thought of them as actual munitions. And the whole concept of drone warfare has entirely changed. I'm not sure the way that we actually look at it has changed. And I think our policymakers and our defense analysts are still kind of operating on the, we're both Iraq, Afghanistan guys, like the Predator drone with one Hellfire roaming around with a UAS, like targeting, right? That's not the way it is anymore, and they really need to adapt much quicker. And I think we, again, even us on the policy side, need to look at drones, such as the Lucas, more again as a munition than it is as any other type of counter drone program or anything else like that.
Well, how can Congress help sort of prompt the department to do that? Because, I mean, there was, maybe $1.1 billion for this drone dominance initiative that the Pentagon is running in reconciliation. There's the Army moving out on various Sky Foundry and other sort of drone-related programs. I mean, what is Congress's role in sort of shifting how the department views this technology and prompts them to adopt both drone and counter-drone effects?
Well, I mean, we have, Congress has historically been the best demand signal for where the investment has to happen. And the best ideas don't necessarily come from the DoD. If you look at even at the history, for example, of the aircraft carrier, it was Congress that was, prior to World War II, that put down the marker in previous NDA that the U.S. was going to move away from its frigate battleship program to aircraft program. Had we not done that, World War II it's a nothing. We're not even in it. And so we should use both our bully pulpit opportunities as well as the messaging and policy weaponry that we can find within the NDAA to push the Defense Department and everyone else aligned with it to actually start thinking in that way and actually moving that way. Secondarily, when it comes to the promotions of officers, making sure that we find the officers that are moving up into the ranks that are going to be the decision makers, that they're actually understanding the world that we're fighting in now, versus believing that this is some old school battlefront that just hasn't existed for quite a while.
There's a lot of work being done on this front that involves a lot of you in this room. We just have to fund it, and the $1.5 trillion top lines is a big step in that direction. The supplemental for Iran and what we did in the Big Beautiful Bill are part of that too. Ruben, I'll be happy to help you find some cuts in other places to fund a $1.5 trillion. I
could find some in Indiana. The other area to kind of to find money without finding money is to have kind of collaborative industrial work with other countries, other like-minded countries. We see some of that with the F-35, but it doesn't mean we can't be doing the same thing with a lot of the drone capabilities that are already being developed in Ukraine and other parts of the country. We could also, find and start working with countries that maybe are going to be on the front line of this before we are. We have a lot of Indo-PACOM countries that don't have a great defense industrial base, but they have money to spend. And in the end, we're probably going to all be in the same fighting hole. The Army calls them foxholes, Marines fighting holes. And so it's in their best interest for them to actually fund the R&D for a lot of these programs, and then potentially have some type of collaborative creation of whatever it is, whether it is drones, whether it is any other type of platform.
I was just waiting on some of these people to come off a commercial. See what Bloomberg saying?
Cool, it was just bad timing, but we're not going to do it, and
all right, we'll continue to follow, obviously, this story throughout the next couple of hours. Also, Brent crude briefly jumped back above $100 a barrel as Iran escalated attacks on shipping and energy infrastructure. Fertilizer stocks are also higher as the Strait accounts for 1/3 of global fertilizer flows. And as a result, we're seeing the costs really jump. We're seeing countries reach out for help. India asked China for help getting more fertilizer. And we're about to get into the key planting season, so it could get serious for food price inflation. Jorge Leon, head of geopolitical analysis at Rystad Energy, weighed in on the rapidly escalating tensions on Bloomberg surveillance.
First of all, the scenario of the U.S. exporting vessels, we don't see appetite from shipping companies to take that option at all right now. The mechanism is still not in place, and we don't think that this is likely to happen anytime soon.
The Strait of Hormuz. Strait of Hormuz still closed. See what Schwab's saying.
Conflict. We announced and we have.
Actually, no, sorry, it's not closed. But I'm pretty sure only one ship can fit through there at a time anyway. But it was
before it topped out. This could actually be the same type of situation here. Now we will get
was
some
closed.
comments
I don't
from
know if
some
it still
Middle
is.
Eastern countries this morning. Iraq already actually just talked about the fact that.
Guys, I'm going to go ahead and take me another smoke break. We've got about 30 minutes until the market opens. I'm going to leave up this. I'm still in the chat. I'm taking my phone with me. I'm just going to get my nicotine in while I can, huh? If you got any stock picks you want me to check out, please drop them in the chat. I'll be glad to look anything up you want. But I will be back. The stream's going to stay up, so y'all can check out the heat map and the news. I'm going to get my smoke in while I can. Thanks for coming. Please drop a like. It really helps. I love you all. I love you all so much. I love you in the mouth.
Happen. In fact, it gives you a little bit more price leverage over the long term that we are going to see this release from all of these countries. So we could see maybe temporary relief, but if you look at the farther end of the curve for futures for oil, it's starting to price a little bit higher because at the end of the day, once this issue is resolved, a lot of these countries are going to backfill those inventories, and that could be immediate demand for the energy market as a whole. So kind of a double-edged sword here when we're looking at this SPR release.
And we know Iran's been relentless. I mean, they promised continuous strikes. They were actually noting $200 the barrel for oil, sort of you're all going to have the pain of the price to pay. So, I mean, I think that's where we stand, and nat gas has been higher. I mean, across the board, anything else with the energy futures before we get to some of the jobless claims numbers?
You're seeing a small uptick when it comes to natural gas, but let's be mindful as well. This is usually a headwind season for U.S. natural gas. We have a lot in inventory here, and we are kind of between that sweet spot of heating demand as well as cooling demand. So overall, draw on inventories is going to be very light. But the fact that we are starting to see it move up is kind of indicating that LNG demand and prices are going to go higher as well. And the more that we can actually export to backfill some of the lack of supply from the Middle East here, you could be tailwinds for companies like a Venture Global or a Cheniere Energy. So I would not expect that natural gas prices are going to go back to the prices that we saw back in November or December of this year, but we could see that it being becoming a little bit elevated. And the last thing to keep on your radar here, Nicole, is going to be the chemical companies. A lot of those chemicals, not only for fertilizer, but just industrial chemicals as a whole, flow through the strait, and a lot of those companies have been catching a pretty decent bid over the last couple of days, and in fact, some of them last couple of months or so. So Dow Chemical, Mosaic, CF Industries, which is a fertilizer manufacturer, has continued to move higher here, and I think that's going to be your next big concern that can translate into inflation for the overall consumer that could be sticky for this year.
All right, let's return our attention over to the labor market. I mean, last Friday's jobs report got buried with everything, the surge that we saw in oil, into Monday, and nobody's been talking about jobs as much. Let's talk about the weekly jobs claims that just came in today.
Yeah, you're starting to see a little bit of a bifurcation between the high-frequency data like initial claims and what we are seeing on a monthly basis. And this really just shows that this birth-death model update is really kind of distorting the monthly data. Maybe it's not distorting it, but it's really adjusting the monthly data more aggressively than the market expected. And the weekly data that we are getting is actually relatively strong. Initial claims came in at 213,000. Street was looking for 214,000, so 1,000 less claims than the market's expectations here. And then you are also seeing continuing claims actually slip to the downside, moving lower, which is a positive for the labor market. That came in at 1.85 million. So you are seeing maybe some individuals that have been on the sidelines getting back into the labor market just based on this data. And we are not seeing a massive re-rating higher when it comes to initial claims. Now let's see if that's going to take place and this trend is going to continue over the next month or so. We know we have some weather effects that have been taking place as well, and then also some funding measures that might also distort the labor market, especially on the government side. But if you're just looking at the initial claims as a whole and you did not look at any of the monthly jobless claims, you would actually see that the market's actually kind of holding up when it comes to the labor market here. So kind of a split when it comes to the high frequency data compared to the BLS data that we get on a monthly basis.
And last but not least, let's a quick check on the housing starts and permits.
Yeah, so housing starts and permits, actually, this is very volatile here. We actually had building permits decline by 5.4% on a month-over-month basis. The previous number was actually 4.8%. We actually did see that kind of revising to the downside here a tad bit. And if you're looking at housing starts, we did see a decline there, Nicole, that you got to be a little bit mindful of here. Housing starts came in, the increase for housing starts in January increased by 7.2%. Previously, that was at 4.8%. And housing starts for the total number coming in at 1.48 million. She was looking for 1.34 million. So better than expected. A lot of variability, especially at the start of the year here. But you're not seeing a major crack within the housing market as of yet, even though inventory is continuing to ramp up and prices are still staying elevated. We have not seen those prices move lower yet. But if we have lower mortgage rates, that could also bring some buyers off the sidelines here to try to backstop maybe some weakness that we've seen.
And you know what, Kevin, I had mentioned the $200 a barrel that Iran alluded to, and we actually had a rebuttal, which I saw this morning. Our energy secretary was speaking and actually made a reference to the $200 a barrel. Energy Secretary Wright was speaking this morning and said $200 a barrel is unlikely. U.S. Energy Secretary did say this: short-term disruption is needed for long-term energy security. And as you and I discussed, the 172 million barrels of the Strategic Petroleum Reserve, which will now be taken out. And he did say that that would be replaced within the next year. About 200 million barrels would be replaced in the Strategic Reserve within the next 12 months. So I just wanted to get that update in. Kevin Green, wonderful to see you. Thank you. And Jenny Horn is with us, host of Next Gen Investing, and we're taking a look at Dick's Sporting Goods. The numbers this morning. Good morning, Jenny.
Good morning, Nicole. And actually a pretty nice move today, at least right now as it stands in Dick's Sporting Goods, as we're seeing some of their overall turnaround strategy hopefully start to really take hold. It has not been a very clean earnings season for anything with either international or athletic retail exposure, but this does seem like we're trying to right this ship after, tariffs and just broader competition, frankly, has weighed on this entire industry. But all that to be said, they did see higher fourth quarter comparable sales, as they did highlight specifically seeing progress in this turnaround after recently acquiring Foot Locker. They did report net income of around $1.41 a share. That was substantially lower than what we saw a year ago, but on adjusted earnings of $3.45 a share, that was actually well ahead of expectations. And so net sales rose compared to around $6.23 billion from around $3.89 billion. That also did actually beat pretty handily. But comparable sales, which right now do not include the Foot Locker business, rose about 3.1%. That easily topped forecasts of around 2%. And so as far as guidance, we did also see some improving metrics, like adjusted right now earnings expected to come in actually slightly below the midpoint, while we are seeing their 2026 net sales coming in, again, you could say at the lower end of their previous guidance, but not necessarily a miss by any means. They are, though, really focused on cleaning out the garage, they said, in terms of their efforts on Foot Locker, and they've really been preparing this brand for an inflection point by pointing to this back-to-school season, as well as mentioning, of course, a stronger holiday season. Core Dick's does still remain relatively strong. And again, that brand has not really wavered, as we've seen really consistency. And now their 2026 outlook does imply continued growth at Dick's Sporting Goods of around 2 to 4% and consolidated earnings guidance between around $13.70 to $14.70 a share, which really signals some confidence in the underlying demand. So as far as maybe what was not as optimistic, it's again the fact that we are seeing Foot Locker remaining a pretty key risk, as the inventory cleanout is going to take time, and it's also going to mean that several hundreds of millions of dollars of pre-tax charges could create some execution uncertainty. Now, consolidated margins also under pressure as we see these higher fixed costs with integration expenses, as well as consumers still opting to be more cost conscious. So all that to be said, comparable sales growth is impressive, yes, but it has also moderated from peaks. So still showing that we are not turned all the way around yet in this turnaround story.
Yeah, understood. I mean, look, most of these stocks have not been doing particularly well. I know Nike's in the middle of the turnaround story, but that stock's right around 52-week lows, but had a good, bright outlook. And as you noted, you know, Dick's has somewhat of a mixed outlook, raising the dividend. There are some bright spots there. And the stock is up 5% with a better than expected quarterly number. What about Dollar General? Where does that fit in?
So Dollar General obviously is in somewhat of its own tier, because I know we tend to group the discount retailers, but to me, it's like basically Dollar General, Dollar Tree, because they have a different margin structure and frankly, less margins to work with than even like a TJX, Roster's, Burlington. So for that reason, we've seen some resiliency actually in this name if you look at the last 52 weeks, but unfortunately, not so much the case today, as we did still see a really strong fourth quarter performance. Net sales rose just shy of 6%, and same-store sales rose by about 4.3%, driven by these higher traffic and higher average ticket size trends, showing that consumers still are flocking to Dollar General. Profitability did rebound sharply in the quarter, with operating profits up 100%, earnings per share up more than 120%, which also reflected this really strong cost control and, again, easier comparisons from last year. So as far as what is not working this morning, I mean, I think that the easiest takeaway there is that growth does remain heavily in their consumable business, which does support traffic, but it does limit some of that margin upside at their non-consumable discretionary categories, which are still frankly lagging. And so, well, right now, again, we've seen margin improvement. They still do remain below their more longer-term averages, which shows that, again, we're still seeing sensitivity to wage inflation as well as just renewed markdown pressures. Now, Dollar General, I always think it's such an interesting story because it's so massive and I think almost underappreciated. As right now, the U.S. locations in terms of Dollar General's footprint does make it larger than Walmart, Target, Dollar Tree, CVS, and Walgreens combined. And so this is a massive company. Every American lives within 5 to 10 miles of one. So does give a good read on middle and lower income America, which is frankly the bulk of this country.
All right, Jenny Horan, thank you so much for Next Gen Investing. Appreciate it. And coming up, we'll get you ready for the trading day. Mark Travis is standing by from Intrepid Capital. He also has a few stocks that he likes. He'll comment on the sell-off that we've been seeing now, you know, over the last week or so because the pressure of oil is on and geopolitical issues. So we'll be right back.
This is Fast Market, built for traders who want more than just headlines.
We walk you through trade ideas with structure, risk management, and a focus on execution.
From options to earnings to volatility plays, we bring decades of trading experience to every segment.
With real-time insight across products and sectors, we deliver what active traders need to stay ahead. Fast Market weekdays at noon Eastern, live on Schwab Network at schwabnetwork.com.
Hi, I'm Alex.
I'm Jane. And I'm his mom.
Sometimes, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Real
real-time market moves, earnings breakdowns, and trade-ready insights. Follow me on X at Sam_Vardis and connect with me on LinkedIn or Instagram for more.
Welcome back to Opening Bell. So glad you're with us because we need to really comb through some of the volatility we've been seeing. How do we digest the oil surge and pullback and moving higher once again today? Mark Travis is with me, CEO and President at Intrepid Capital. And one headline and then the stocks move higher. I know we've been down 4 or 5 days. What do you think about the current market action?
Well, I think, Nicole, you've had, believe it or not, 3 years of 20% annualized returns. I know it sounds apocalyptic, but we're only down maybe 1 or 2% year to date. So I do think we just have to keep things in perspective. And I do think it's kind of what is your time frame. If you look at when commissions were deregulated in May Day of 75, prior to that, holding periods for fund managers were 4 or 5 years. Today, the typical fund manager turns over a portfolio 100% in a year. So I think for those of us that take a little longer time horizon, this creates an opportunity.
So at this point now, are you making any changes in portfolios or you stay the course here? Are you taking anything off the table or adding to positions to anything that's sold off?
Well, I'm always looking to add, honestly. You certainly have to have cash or you got to sell something. I hesitate to sell. I'm a very reluctant seller of almost anything.
Right.
And I think if you look at these heirloom businesses, I like to call them, the analogy I would use, if you planted a tree on your sidewalk and the paper came every day, would you go out and pull up the tree to see if the roots were growing? Mm-hmm. And I believe a lot of these heirloom business owners are just trying to grow value over sometimes multi-generations. So I want to use what Warren Buffett talks about as sloth. I want to own and hang on and ride through this. And so that's what I'm trying to do.
Right, and you're carefully selecting what you're picking in the first place. So ideally it should weather volatility, economic headwinds, things like that. We have some picks here that we're going to go through, but I mean, for volatility now, I mean, I know you're paying attention. I don't mean it like that. Like you're always looking to add, but you're not going to be fazed by a day or two in the market, especially when you had 3 20% years.
Correct. Yeah, and I really think one of the reasons I'm interested in these family heirlooms is they tend to have defensive balance sheets. So when rates spike and the 10-year goes up 10 basis points, they're not levered in some cases at all. They have net cash, so they can ride through these storms.
Right.
And as an equity holder, that helps me sleep at night.
Do you anticipate which direction? Gold, oil, bond yields? Where do you think each are going?
Well, I think in terms of gold, we're running a $2 trillion deficit with a T.
Right.
And it's kind of considered hard money. I do something periodically just out of curiosity. I did it before I came. If you look at the gold ETF, which GLD, I believe, came out in November of 2004, and you price that versus SPY, believe it or not, it's 125 basis points improvement over the S&P return in that 22-year period. So I think gold has a place. Now, whether it goes from 5,200 to 10.4, I tend to doubt. It's certainly had a great run. Oil, we've been to $100 a barrel before. We were there in the last couple of years. So
last couple days we were.
We'll adapt to that. Again, I think you can have a bear market of price or you can have a bear market of time. I would not be surprised to see a bear market of time where we just kind of flatline for a while and just don't make any forward progress.
Right.
The ones people always worry about are a bear market in price.
We're not far from 4.25% now on the 10-year bond yield. I think, we've been here recently. We haven't been to 4 or 5. That would be a different picture, right? And that could pressure markets, they tell me. Is that right? Do you think that's right?
Well, I mean, you're discounting a cash flow. And you raise the discount rate, you lower the terminal value of the business.
Look at oil.
I'm sure that would have a material
what did I tell you?
Pricing. And
I told you right here, it's probably a good buy. Look at that.
When the tide goes
Bang!
up, you get to see who's swimming naked.
Yeah. Let's talk about Garmin, Watsco, and Sprott. Let's look at these.
We are 9 minutes away, my time. There's always a delay. I think it's only about a 20-second delay. I could be wrong. but I did kick up the quality on my pass-through. So yeah, do me a favor and drop a like. Drop a like. It would really help. It would really, really, really help.
To make that kind of a difference, I don't know.
Yeah, you can't just program it and do all your research for you, then go have a lemonade. You got to dig in and do the research. What it does do, I think, is help you ask smarter questions.
I like lemonade.
And I think the people that are using it right are using to make their own jobs more efficient, but also
Can't believe
to
you
ask
like
the right
lemonade
questions.
too.
If you can use it that way, you will be more productive as you work, but you're also going to generate more work product, and you're going to actually end up working more. This is not a set it and forget it and I'll see you later. With some jobs it is, but with that thought industry, especially in tech and other sectors right now, it is.
No, I mean, look, there's still like a lot of scary bad things, but you know, the macro setup, like the.
Never heard a better announcement on news. There's lots of scary bad things
from LPs all the time is this a phenomenon of just the Trump administration and just really helping them understand it? It's really
thank you, Skull Spotter.
And in the defense tech side, you can do, it is a bit of a sacred cow where it's like, we're not going to get $1.5 trillion budgets, but we could do better. If we're selling a better mousetrap that's better, faster, cheaper, we can do well in a bigger budget item, but we can do just as well or better in a low budget environment. So even if it went below 800, we would still do well. Could we do a lot better in terms of, I think right now when people ask me like, what do you need from the government right now, between the administration and Congress, there's been enough acquisition reform and sincerity from the administration. Like they're serious, they're moving fast, they're cutting back red tape, they're serious about competition.
Thank you, Donald Trump.
I always like, you know, back in my Palantir days, the biggest thing that I fought for initially was let's compete based off of.
You know, I think it's brilliant of Trump to, whether it happens or not, it's not, you know, completely up to him, but this idea of a gasoline tax holiday, that'd be awesome. The taxes on gas, I'm pretty sure, is very high. I think a tax holiday might knock it down a fair amount. Anybody have any idea how much? I think it averages somewhere between 25 to 50 cents a gallon for your taxes. Something like that, I think. Someone correct me if I'm wrong, but I'm pretty sure it's up there. Let's go back to Bloomberg.
Join us as we get to the heart of
making process a lot tighter, but it hasn't replaced the fact that human beings need to write articles, edit.
No, you just need to give me my money.
If you are just tuning in here, this is the 4th annual summit that's convening lawmakers, senior national security officials, and leading innovators there at the Ronald Reagan Institute in Washington, D.C. for this 2-day event. We've heard from several speakers already this morning as this last day does continue. We're going to step away for a commercial break on Live Now from Fox. Much more news and live events to come. Stay with us.
Oh, no, I won't.
New online videos.
More commercials.
So that's going to make them do that better. But
Iran, the new Supreme Leader Mojtaba Khamenei saying the Strait of Hormuz should remain closed. And you do see, as a result, Brent crude resuming its ascent. It had been over $100 a barrel at one point and come back down. Here's a intraday chart so you can see that we're coming back towards $100 a barrel on Brent, and obviously oil rising across the petroleum universe there. But we didn't see a picture of Khamenei, or we didn't see pictures, I should say, live pictures, which I think is interesting because we haven't seen him since he's been tapped as supreme leader. So he hasn't been in
he's
public.
hiding.
He's
hiding like the coward he is. He knows.
President Trump, I'm sure, and the U.S. military would love a chance to get him.
Yeah.
But this is what markets have been waiting for.
This is what they've been waiting for. The reaction isn't huge, but maybe because a lot of this is priced in. Futures do move to the low of the session. Oil ticks slightly higher. We're still trading below $100 a barrel. Again, the headlines of the new Supreme Leader saying that the Strait of Hormuz should be closed. And they also saying we believe in friendship with our neighbors and that Iran will take compensation from the enemy. Matt, this is the language that does not
Money
suggest
talks.
an off-ramp or an end to this war anytime soon.
No, it doesn't look like that's going to happen. And even if the Energy Secretary, again, makes comments about when we're going to be escorting ships, no one believes it. We are just 3 minutes away from the open trade.
Let's go, baby. Let's go, baby. 3 minutes. You can probably call it 2 minutes.
Yeztugo is an injectable prescription medicine.
Crazy moves in the overnight session out in Asia as we've seen in previous sessions. I mean, we've seen wild swings in the vicinity of like 5% for the Kospi and the Nikkei 225. Just some fractional losses there for the Hang Seng Index and the Nikkei 225 down 1%. Europe currently trading right now. Obviously, we've got the German DAX just on the line to the downside as they are exercising caution out there as well. The FTSE 100, 0.2% lower right now. But as I mentioned, a lot of attention, keeping an eye on that oil. We've got Brent at 99, WTI at 94. We've got the dollar that's higher this morning. Obviously, a lot of macro data coming through this morning as well. But obviously, this is being overshadowed by what we are seeing here over in the Middle East. Also, just to point out, Trump taking to Truth Social about 12 minutes ago, saying the United States is the largest oil producer in the world by far. So when oil prices go up, we make a lot of money. So obviously there are just so many mixed messages coming through right now.
Let's go.
As to,
Let's
how
go.
markets are digesting all of this.
Yeah, and Trump also saying that it's more important that Iran is stopped than looking at oil prices. To your point, we have plenty of oil, while Khomeini now is saying that the Strait of Hormuz must be kept closed. Yeah. All U.S. bases should immediately be closed in the region. Those bases will be attacked. They want unity. It's some tough talk back and forth.
It is, and what we're seeing as far as the market reaction, sort of bringing it back to our bread and butter, Nicole, is that investors are very uneasy around what we're seeing here, because what's happened now is there's this global repricing of oil, but also, of course, these rates. I mean, if you take a look at everywhere from the UK to Germany to Australia, I mean, you have seen those long-dated bond yields going up, even in the short end as well. So this is a very fluid situation. Suffice to say, 10-year 425, something to keep tabs on. We've actually seen the 2-year up at the highest for the year, but relatively insulated compared to what we've seen around the rest of the world. We've seen this global repricing of rate expectations.
Right, and we were around 420 prior, so 425 people can handle. I don't know how much they're going to handle 4.5. I mean, that's a different story. But so I know you have Lee Otto, and you're going to share that with us.
Yeah, something to keep an eye on this morning. Obviously, we're tracking these earnings as well, and really that is what's driving these markets too. So profit shrinking from a year earlier, revenue is down 35%, sales are struggling, gross margins holding up but fell from a year earlier. Full year gross margins were down. Haven't seen a great response to its lineup of cars. Look, this company is strongly positioned because it does very much focus on the premium and the high-end family segment. It specializes in the long range to address some of the range anxiety. But obviously, it's a time for some of these automakers. Suffice to say, though, it is a profitable company. Not all of them are in the EV business in China. But we are seeing shares under pressure this morning off the back of this.
Check out NVIDIA.
Down about 4%.
Come on, baby.
Sam Bottas. You can catch her on Morning Trade Live at 10 a.m. Here's the opening bell, folks.
Here we go. Dollar General out the gate, down a little bit. Dollar's coming down. The hell with that Draz,
Canna. Stocks on Wall Street are opening to the downside right now, about 400 points lower on the Dow Jones Industrial Average. Correction, 500 points lower on the Dow Jones Industrial Average, now at 46,906. The S&P 500 is down more than 0.75% at 6720, losing 55 points. In percentage terms, the Dow is down 1.17%. The Nasdaq is down 0.8%, losing 206 points. The Russell down 1.5%.
Nasdaq is down. Look at all that red.
This is sitting at 94.52 the barrel.
Look at all that red.
I don't know. Well, that's probably about 8% higher right now. And we have a war of words right now with the Iran Supreme Leader
Dow Jones,
Khomeini, and also President Trump.
Dow Jones is down, the Nasdaq is down. See what the Russell 1000 down. Damn. The finance sector is sucking it. Go back to the S&P. Yeah, a lot of blood in the streets. Tech is doing all right. But it looks like every other sector except for energy and tech is eating it right now. Dollar's on its way back up. Crypto looking flat. Bitcoin probably about to bounce off of that support. Let's see our biggest gainers in the market. And for crypto, Trella, 163% up. Congratulations if you bought any Trella or Trade Tide or Cherry AI. Hey, look at that. What was I saying yesterday about tokenized stocks? Netflix's tokenized stock is up 75%. I am telling you, more and more companies are doing this. They're tokenizing their stocks. And it is an excellent market to get into because I'm telling you, man, every time I pull up these biggest gainers, there's a tokenized stock for a very well-established company in there. Now, this isn't just some jackass who made a coin for something they like that they made. No, that's actually Netflix. People are starting to tokenize their stocks, and I'm telling you, man, it's any big company that you see tokenizing their stocks, Hims and Hers Health, look at that. You probably would stand to gain better right now buying their coin than their stock. Look, this is the way the world's going, guys. This is the way the world's going. Like it or not. I'm not seeing any more tokenized stocks on the big gainers. Oop, there's one, I think. They're usually in parentheses. I can't even read it. I'm moving it so fast, but I'm trying to... Yeah, anyway. Let's check out the biggest losers. Joltify. Ouch. Down 92%. I am so sorry if you have any of these. That's a big ouch. Crypto is the wild west of money, guys. You got to be careful. Got to be careful. But just out of curiosity, I'm looking for any tokenized stocks in the losers Circle Internet Group. Circle tokenized stock. I don't know what Circle is, but they're down 8%. You don't even have the biggest losers down too very much. Carvana tokenized stock down 5%. Wonder what's up with that. Isn't Carvana a failing company? Pretty sure they're a failing company. Look at that. Can you say manipulation of some sort? Let's take a look at Carvana's actual stock, shall we? I'm just curious. Whew. Yeah, see, a lot of these companies are going to tokenize their stock to raise money. I mean, that's the only reason anybody IPOs on the stock market is to raise capital. So if there's a way for them to make some money, I do believe what you're seeing here. Look at these BS. Manipulation, taking your money. Manipulation, taking some profit. Manipulation. Oh, wow, this is nice. Maybe we should buy some more. Oh, nope, taking some cash. Not all of it. Yep, all of it. Yeah, I'm pretty sure Carvana is a failing company. I repeat, I would not invest in this company at all. Tokenized stock or stock, for that matter. S&P 500 looking pretty sheet. Let's take a look at the markets as a whole. Yeah, that Strait of Hormuz. Only allowing one ship in at a time. So the S&P 500 down almost a full %. The NASDAQ is up a negligible amount. Dow's down over 1%. NASDAQ Composite, nothing to write home about. Volatility is up about 8%. S&P down almost a whole %. Let's take a look. The biggest gainers so far. Codexis, never even heard of them. Tilly's, Bumble. That's not the gay dating site, is it? I don't know. Lightwave, Vera Bradley, Petco. Wow, Petco up 27%, eh? Interesting. I wonder what the catalyst for Petco was today. Damn. That's a hell of a jump. Ooh. That RSI is way too high. So I'm going to come back down. If you're unfamiliar with what RSI is, it is Relative Strength Index. When you're looking at charts that people have live, let's say on YouTube or Rumble for that matter, when you're looking at live charts, you often see something else down here at the bottom. It's not very often it's RSI. It's usually volume or order flow. I keep RSI on mine because it's just a much better predictor of things. And the way our RSI works is it acts as a throttle, right? There's no one particular number on this scale that is better, okay? Typically, once you get around between the 60 and 70 mark on your RSI is when you start seeing it going up. The higher it is, the faster up it's going to go. However, once you get up to 75-ish or higher, it's getting overbought. It's overheating. You know what I mean? When it gets over 75, 80, that means it's going to come down relatively soon. Now, on the other side of that, when you see RSI down below 35, usually more below 30, but around the 30, 35 mark, the same is inversely true. It's going to come down, and the lower that number gets, the more oversold it is. It's overheating in the opposite direction, which means it's due for a bounce up. The sweet spot for good sustainable runs is in the mid to high 60s. If that RSI is staying in that range, those gains are going to be more sustainable. Now down here, there's a purple line and a yellow line. The yellow line is the moving average. The purple line is the current. We are way above the average, which I expect that to translate to a dip coming soon. Let's take a look at, yeah, the whole Carvana thing. That's funny. That tokenized stock that I've seen shit the bed. But like I said, pretty sure Carvana is a failing company anyway. I like looking at these losers. But like I just said, you're not seeing too many tokenized stocks in the loser department. Whoa, did I just see Netflix's tokenized stock coming down? Sometimes I question some of the data that I see in here. Buttcoin, the next Bitcoin. Buttcoin. Fartcoin. Chevron's tokenized stock. Petrobras tokenized stock. Gains. ExxonMobil's tokenized stock. Gains. I'm telling you, man. I'm telling you. Crypto is the future. If you doubt that, then I question your knowledge on the subject. Because the more I learn about blockchain technology in particular, blockchain technology is so brilliant it's alien. The average person doesn't understand how crypto works. The average person can't understand how crypto works because it's that complicated. It's that complex. It's such a beautiful, gorgeous technology, and it's so far ahead of its time. If you're a conspiracy theory kind of person, it makes one start to question maybe it was an alien, maybe it was somebody who time traveled, right? Because nobody's touched old Satoshi's wallet, bro. There's billions in that wallet. There's no good reason not to touch it. Either he's an alien, either Satoshi was an alien, he was a time traveler, or he's dead. Those are the only options, in my opinion. What do you think? What do you think of old Satoshi Nakamoto? I would love to get the community's opinions. Drop your theory in the chat. I would love to discuss this topic. Anyway, yeah, crypto is such a gorgeous technology. We as a species have not fully realized its potential. One of the biggest problems that crypto faced were the implementation of NFTs. Cool idea, but not really. But if you ask me, that's one of those stumbling blocks that humanity goes through when they are playing with something that they haven't fully realized the potential of. You know what I'm saying? So, while it was a shaky attempt at utilizing blockchain technology for something other than, just coins and investment, I don't think we're going to see the last of things on the blockchain like that. I mean, there's plenty of insurance companies that are already implementing the smart contract protocol for their things. It's good for record keeping. It's good for transparency. You can't lie. You can't BS your numbers. And that, my friends, is precisely why there was such a huge campaign against crypto in its earlier days. The technology is now 17 years old. You ever heard of the old adage, if you can't beat them, join them? Yeah, that's why you're seeing places like Wells Fargo and JP Morgan and the big money names in the world starting to get in on it because they've realized they ain't beating it. The cat's out of the bag. Short of a global EMP, it's never going back in the bag. And even if that were to happen, guys, what do we do as a species? We come back. The only thing, in my opinion, that would fully destroy blockchain and crypto and everything associated with it to where it would never come back would be an asteroid decimating the planet and wiping out 90% of all life. That's it. Even with an EMP, we're going to rebuild. That's what we do. And if you're one of these people that lives on that what if string, come on, man. You can't live that way. We as a species cannot live that way. We have to use what we've got now. Now is the only moment that matters. And Bitcoin's never going to zero. Hate to tell you. Never. Ever. Ever, 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 ever. Record what I just said and save it so you can use it against me. Never. But yeah. That cat's out of the bag, baby. Crypto's here to stay. It is the way of the future. Will there be bumps along the road? Oh, sure. Hell yeah. But that's how we learn. That's how we learn. We learn from those stumbles. As a species, as a whole. Some people don't. But as a whole, we do. But yeah, there is a movie out there. It's on YouTube. It's called, I can never remember which one it is. It's either God Bless Bitcoin or The Rise and Rise and Rise of Bitcoin. It's one of those two. In the beginning of that movie, it starts with explaining the history of money in general. I mean, from as far back as we can. And it's a very well-crafted video that, in my opinion, is one of the best ways to look at dicks. The dick's coming down. It went up hard, but now it's limp. But yeah, I lost track of what I was saying. But yeah, that movie, that movie is what did it for me. It explained the history of money and how it works and how crypto removes, the main theme is how crypto removes the need for trust in our monetary system. Which is why we have the screwed up system we have. Do you know what fractional reserve banking is? You should. It's something that all banks, it's actually legal, they all practice. Fractional reserve states, basically, that a bank, by law, is only required to keep 9% of its deposits. They are free to loan out the rest, which means for every $100 you put in the bank, they're turning around and loaning out $91 of that $100. to other people. And guess what? When it shows up as a deposit on that balance sheet, guess what? That's compounding its ability to loan out. That is literally creating money out of thin air. That's fractional reserve. It's real. And it is exactly how I just described it. Go ahead and fact check me all you want. But that's why we have such crazy debt. And something about money is debt. If you consider what I just said about fractional reserve, okay? If we paid off that crazy, I don't know what it's up to now, it changes every day, something close to 30-something trillion dollars. If we were to pay all that back, there wouldn't be $1 in circulation. That debt is not going anywhere. It never will. And that's the point. That is the point. I'm getting my knowledge of the fractional reserve system from another delightful movie known as Zeitgeist. I encourage you all to watch it. The addendum, Zeitgeist 2, delves much deeper into the fractional reserve stuff. But the initial movie, the first Zeitgeist, it starts off with religion and then the fractional reserve and money, and then it gets into 9/11, basically. But the addendum is mostly about the fractional reserve. So you can get the general idea by watching the first Zeitgeist, and that's with a Z, Zeitgeist. Zeitgeist. Excellent, excellent movie. It might hurt some people's feelings, especially the bit on religion, but anyway, yeah. So the whole idea behind our national debt, I really wish people would shut up about paying it down. I mean, we do work to pay it down, but that's the name of the game. That's what drives our economy, is debt. The goal is not to pay it off. But yeah, the movie, the Bitcoin movie that I was talking about, how they explained the history of money. They get into a little bit of that as well. But you see, the beautiful thing about blockchain and Bitcoin is by removing the need for trust in the financial system, because it's open ledger and you can see all the transactions, what do you think that does for money? Keeping it honest? Forcing it to be honest? I mean, what you're doing with that money is not what I'm talking about. But it's the traceability and the ability to see every transaction that will ultimately lend to just a stronger system. And it's the fact that we rely on trust in our current financial, in our current global financial scheme of things. That trust, come on. I mean, what do you think? What do you think's going to happen if you put $100 on a table and walk away? Somebody's going to take it. But if there's a camera on that table, somebody might still do it. But you get what I'm saying. Bitcoin and blockchain remove the need for trust, thereby eliminating the possibility of your currency being manipulated, like fiat currency always is, always will be. The function is to extract the value out of you, the average peasant, and me, so that the rich guys can keep going to the bank. It's a sick and twisted system. Currently today, the dollar buys a nickel's worth. And that's the entire point. The value of the dollar has declined over 90% in the last 100 years. You think that's an accident? You think it's ever going to recover? No. Hell no. When was the last time you saw prices in the store go down anything significantly? You know, back when bread was 5 cents a loaf, it will never be 5 cents a loaf again. Ever. And that's not because the value of those items changed. It's because the buying power of those dollars changed. And that leads into why gold and silver are always such good investments and always will be such good investments, because regardless of what the price says, the value always stays exactly the same. You've heard the phrase store of value. That's because when you see the price of silver going down, you're not seeing the value going down. What you're seeing is the value of the dollar go up. They are inversely related. You see right here, dollar going up, silver coming down, gold too. The only deviation from that standard is when there's some kind of catalyst in the market, and it's always short-lived. Take that to the bank. So yeah, I would highly suggest you check out that movie. The Rise and Rise and Rise of Bitcoin, or God Bless Bitcoin. Like I said, I can't remember which one it is. But that's what did it for me. That's what sent me over the edge in my love for Bitcoin. That is why you see in some of my profile pics, you on Rumble, you see my profile pic says Maxi. That's me. I am a Bitcoin Maxi. What does that mean? That means every time I get $1, I turn it into Bitcoin and I hold it as such. I do not have faith in any fiat currency because they are so heavily manipulated. And if you can manipulate my cash, yeah, I got a big problem with that. Now, is Bitcoin manipulatable? Absolutely. It's the Wild West of finance. We haven't wrapped all that up yet. And as long as institutional investors are the major players, they're going to have a leg up. That's why I encourage everybody to buy some. Not because I might benefit from it, but because it will benefit from it. Bitcoin itself, we're already past a certain point of no return with institutional investment. And 20 million Bitcoin have already been mined, and there's only ever going to be 21 million. It's going to take another 100 years for that last million to be mined because of the halving cycle. If you do the math, every 4 years, the hash rate gets cut in half. So it's going to take another 100 years before that last million Bitcoin is mined. So what does that do? That creates scarcity. What does scarcity do in a market that's heavily dependent on supply and demand? Scarcity keeps it honest. Now, you mean that figuratively. It keeps it real. How much money is in our money supply? That changes every day. If there is an unlimited amount of something, you cannot have a high value of it. Or excuse me, I should say, if there's a constantly increasing amount of anything, you're going to have a constantly decreasing in the value, because every dollar that's printed, you're not creating any new value. You're stealing value from the rest of the supply. That's why inflation ran crazy around the pandemic, because of all that money printing. It took value from the existing money in the market. You cannot create new value, but you can create money out of thin air. Something to ponder.
Point as hostilities continue, so no one can really say how long this will go on, or what directions it will take.
Someone give me a stock ticker symbol so I'll shut up.
Okay.
Running my mouth.
We're delighted to see our European allies agree to the 5% and to do their fair share of their part of the burden sharing. How long do you think it's going to take for our European friends, once they've enacted this 5%, to build the capabilities and force structure needed to actually assume the lead role in the conventional defense of Europe?
Yeah, Chairman, thank you. I agree with you that the agreement that made at the Hague summit to spend 5% of military spending is a tremendous accomplishment, and it shows how seriously the Europeans are taking their own security. Many nations are already on a pathway with 5 or 6 nations this year already near or above 5% of GDP. The biggest risk for those countries is now turning that money into actual military capability in their inventory, and that does take an industrial base that can deliver on time. So I see that as the biggest risk to them being able to achieve this on a quick timeline. So, from my perspective, I think we're looking at different capabilities will show up at different times. It will be a gradual slope that will increase in the pace of European rearmament as the defense industrial base gets healthy. So I think you'll see it start slowly, and then as the industrial base investments take off, they'll be able to rearm quickly. So I would say by the end of this decade, they will have made great progress toward that. They won't be all the way there, but certainly by 2035, they will be.
Okay, so by 2030, they will have made great progress, but they won't be there. By 2035, if their commitment continues, they should be able to be in the leadership position on that.
Yes, Senator, I believe that's correct.
Thank you very much. Senator Reid.
Oh, thank you very much, Mr. Chairman. Thank you, gentlemen. General Reid, you have been quoted as saying that we must start a new program to modernize our strategic airlift, the C-5 and the C-17. I know you can't disclose details of the forthcoming budget proposals, but are you confident that we'll begin that process of modernization this year?
Senator, thank you for the question. Strategic airlift is one of the most critical capabilities that we provide. It's what we call...
I don't know why they put this sort of music when it comes to money. Give me something a little more fast-paced. Give me some. Yes, sir.
Welcome to Balance of Power.
This is Bloomberg Television. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Yeah, I get charged a nickel every time that damn song comes up. Trying to see if there's any news. And not just music to take my nickels from me. Schwab. Come on, let's have some catalysts.
Hello, everybody. Welcome to Morning Trade Live. I'm Sam Bartis, live from the floor of the New York Stock Exchange. We have plenty to hit on both here and abroad over the next hour.
You definitely
it's been
do,
a very
baby.
busy morning. So here is a look at what is coming up on today's show. Is market volatility due to geopolitics just going to become the new normal in the short term? We'll examine that as the Middle East conflict continues to weigh on these markets. Over the next hour, we'll have example trades for Lennar and Dick's Sporting Goods. Lennar reporting earnings this afternoon, and Dick's...
Damn women, all they can talk about is dicks.
Days of this war. The Supreme Leader also says that the closure of the Strait of Hormuz should be continued as a tool to pressure the enemy.
The new Ayatollah hasn't been seen since he was chosen to replace his father, who was killed at the onset of the war. Oil prices are rocking the markets in early
They
trading.
sure are. Rocking the
Dow
markets.
is down 623 right now. Oil prices touched $100 again today. Gas prices in the U.S. up to an average of $3.60 a gallon. CBS's Kelly O'Grady.
The tankers are still being attacked.
They're gonna
in the
keep
Strait
going
of
up, too.
Hormuz. 400 million barrels feels like a lot, but when you've got
Yeah, that's
15
4
million
days.
going through the Strait of Hormuz every single day that can't get there, it's only about 25 days of supply of oil. So it helps, but
I'd
it
say
really
less than that.
doesn't solve the problem.
The IAE blames the war for the largest supply disruption in the history of the global oil market. The war is spreading into cyberspace. Hackers with ties to Iran have claimed responsibility for a cyber attack on the American-based medical device company Stryker. Employees tell the Wall Street Journal their cell phones and laptops were wiped yesterday.
Damn.
CBS News contributor Chris Krebs.
But this is really, I think, the first time, at least in the U.S., with a U.S.-focused target, that we're seeing significant disruption.
Lawmakers in the House scheduled to take another vote today on funding the Department of Homeland Security and ending the partial government shutdown. The bill, expected to fail almost a month after the shutdown began, some TSA workers are giving up. Chris Van Cleve spoke to an agent in Utah.
Robert Echeverria worked the TSA checkpoints at the Salt Lake City airport for 9 years, but with no paycheck or end in sight to the latest partial government shutdown, he quit.
I love the agency. I love the people that I work with.
Why is this?
But it just my family.
Okay, that is Bloomberg. It didn't match
definitely
what we're
was.
hearing. Okay.
Gas prices, grocery prices, rent increases, it all adds up. A new
Damn right.
Gallup poll finds a third of Americans say they're making sacrifices like driving less and skipping meals to pay for health care. Now the Dow's down 623. This is CBS News.
Oh, that's because they were plugged into CBS. I see. Yeah, man. Market's sucking it. But I mean, dude, I've commented about oil and jump in and invest. I've commented all over social media, and I've had ignorant people trying to tell me how unethical it is to invest in oil at this time and what's going on in the world. Don't be naive. You got to hedge your bets somewhere. It's not like your dollar is going to stop what's going on or cause it to increase. Just don't leave money on the table. That's just stupid. Please, if I'm wrong, someone tell me. See what they're saying over here.
And then also the fact that we are seeing a lot of these storage facilities as well as refining operations also being targeted by drones and missiles. And so that's going to complicate the situation a little bit more. And IEA did talk about the fact that they...
What's up, Daddy Hitler?
8 million,
That's somebody else's screen name.
Loss within the global...
Somebody on Rumble. Oh, excuse me. Diddy Hitler. Nice screen name there, bro. What's going on? Where are you from?
After that, 2 days after that is when Iran and Israel hit, the U.S. and Israel hit Iran. So how has that changed the equation for you, and how fundamentally has it changed the equation?
It definitely changes the equation, but look, it's really going to be a question of how long does this conflict,
when there's nothing in the news and they're just yada-ing it up, they're waiting like we are for some form of catalyst. Let's see what they're saying.
Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they performed.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with
Whoa.
Scarlett Fu and Paul Sweeney on Bloomberg Radio,
Broadcom taking
and the
a
Bloomberg
dump.
Business app.
I'm Alexis Christoforous in for Paul Sweeney today, and Scarlett Fu has the day off. The news is coming fast and furious, and we're getting lots of headlines coming out of Iran today. Hearing for the first time from the new supreme leader in Iran, in which he is warning that other fronts could be opened if the war persists. He is also saying that all U.S. military bases should be shut down overseas, he says, because they will be attacked. So again, this is just feeding into that narrative of how long will this war continue? Will it be long and drawn out? And we're seeing the impact on Wall Street happening swiftly here. S&P, NASDAQ 100 extending their drop to session lows.
Yeah, Alexis, and we're of course watching $100 a barrel on oil. That is supposed
Sure
to be
are. There it
a
is.
headwind for risk assets. A lot of people were worried about that handle, and
Dude,
they're
I'm telling you,
wondering at
man,
what
get
point
in on
that
these
starts to weigh
futures.
on consumers and on the broader economy.
So let's get a look right.
Also, you want the futures that's closer to now when it comes to, when they expire. The shorter term, closer to now, those are the ones you want to play with.
With the U.S. consumer.
Not financial advice.
101. In March 2026, you can turn your view into a trade at ibkr.com/forecast. And the last trading day for this contract, March 22nd. And as Alexis mentioned, we're moving off this headline. Iran's new supreme leader saying the Strait of Hormuz should remain closed. He indicates no intention of ending the effective closure of the waterway.
You gonna
right
die,
now, the S&P
honky.
500 66 points lower, down 1%, 6709 in the index. The Dow 525 points lower, that's down 1.1%. The Nasdaq 100 down 282 points, and that's a decline of 1.1%. More importantly, crude oil, Brent, the international benchmark, is up over 8%. Just shy of 199.
It's going to go over.
A barrel, moving so fast.
It's going to go
can't
over.
give a perfect quote here. Did have some economic data today. Applications for unemployment benefits edging down last week, indicating layoffs remain constrained. The initial claims decreasing by 1,000. But, when you take into account the impact of inflation, maybe these economic numbers aren't going to mean much. Morgan Stanley and Cliffwater capping withdrawals from their multi-billion-dollar private credit funds. Private credit funds, of course, have seen a wave of redemption requests. Investors worried over the quality of the loans, in particular those tied to software companies under the threat of artificial intelligence. It doesn't stop there. Deutsche Bank this morning flagging a $30 billion exposure to private credit. Among some of the movers, we have shares of Petco, 31% higher. They expect a return to positive same-store sales this year. And in the call that we had last night, what I found most fascinating was the CEO, Joel Anderson, saying the company elsewhere is adding to its selection of pets it sells in stores. In particular, he sees spiders, like tarantulas, as, quote, a newer pet trend in the United
Yep, there's
Very
Petco.
interesting.
Tarantulas? Spiders?
I think I'll pass on having a tarantula.
Well, I know
as a pet.
geckos, especially designer geckos, they're selling for like $30,000. I did a small business report on this guy, and demand for geckos is like through the roof for some reason. Anyway, we check the markets.
Look at Battalion Oil.
Right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Alex Simonova, Alexis Christoforous.
I
What a
know.
pleasure.
It's a good omen.
I think so. And my
Look
dad
at Battalion
is Alex,
Oil.
and his birthday was yesterday, so shout out.
Happy So birthday it's
the
to him.
Alex show,
Yeah. John mentioned that stocks are having an ugly day today. It looks like we are edging toward a 1% loss on the S&P 500.
Some more than others, honey.
Underneath the surface as well, with some companies still reporting earnings results. We are going to take a look at some stocks on the move with Avalon Parnell, Bloomberg Equities reporter. Avalon, what are you looking at?
Yeah, we can start off with Mosaic. That's ticker MOS. It's gaining about 4.9%.
I have a list of all the stock gainers, the biggest gainers, sorted by the most.
A flurry of chemical and fertilizer stocks that are broadly higher amid continued disruptions to the Strait of Hormuz. We actually have one analyst from National Bank Financial saying that the conflict could mean near-term upside in fertilizer prices, supporting strong potash revenues. However, Bloomberg analysts are also saying that this is incredibly ill-timed, especially given the fact that the Northern Hemisphere begins spring planting season right about now. So we'll keep an eye on it.
When is a good time?
United Airlines. Now, I'm going to guess. I don't know if there's specific news out on United, but boy, are the airlines continuing to get slammed because 20% of their operating or more of their operating costs is oil, which is soaring.
You are absolutely correct. United
Yes,
Airlines
sir.
is ticker UAL, down about 4.1% today.
If you're planning on
Airlines
taking a trip
across the
anywhere,
board continue to face
better do it
increasing
sooner rather
concerns
than
over
later.
jet fuel
Those
costs,
plane
which, as
tickets
you
are going to
mentioned,
go
represent
up.
nearly a third of an airline's cost.
Right.
And we've already seen, like Jefferies has updated their airline estimates for jet fuel prices, expecting them to be as much as 50% higher compared to January because of the conflict. And we've seen other airlines, including Cathay Pacific, saying that they plan to double fuel surcharges for most routes because of the war.
And Avalon, I know Bumble hasn't been doing too well as dating apps fall out of favor.
There
Can
it
you tell us
is.
What's going on with that company?
Yes, it's looking to buck that trend, at least for right now. Bumble, ticker BMBL, is up as much as 33% most intraday since
36.27, honey.
The online dating company forecasts EBITDA for the first quarter that beat expectations. It also reported a pretty modest fourth quarter revenue beat.
Wow.
Analysts are hopeful that Bumble's new AI-powered assistant, designed to act as almost like a personal matchmaker, will help snap that paid subscriber decline.
What?
And also worth noting that JP Morgan actually upgraded the stock to neutral based on results.
Thank you so much,
A
Avalon.
dating
for
site?
more conversations like this,
Like-
subscribe to Your Stock Movers
What?
Reports. Listen for 5-minute audio reports on the biggest winners
That-
and losers in the stock market. And
Things like that are going to be short-lived. A dating site? Where's the value? Yeah, I know you can say this and say that, but all of their revenue is ad revenue. And obviously paid subscriptions, but if you pay for a dating site, I feel for you. It's getting increasingly difficult, more and more difficult to find people who are worthwhile, isn't it? It's getting exceedingly difficult to find, for men at least, to find a decent woman, because women's priorities in America are they really, really are. Let's break it down. What do you have to do to please a man? Feed him, fuck him, and shut the fuck up sometimes. Right? Pardon my French. That's about it. That's about it, ladies. Now, what does it take to please a woman? I'm not going to start telling you because we'd be here all day. You've got to be a good listener. You've got to be a provider. You've got to be a protector. You've got to be good looking. You've got to make 6 figures. The list goes on. Men are simpler creatures. Doesn't take much. It does not take much to please us. Especially these days with the changing gender roles being such a hot button topic. America has lost its way in many ways, that being one of them. That's another one of the reasons why I am planning on moving to Thailand. Traditional gender roles are alive and well in Thailand. If you are an American, you are a commodity in Thailand. You walk down the street, on the right street, mind you, you will be catcalled. And, if you ever been to a strip club, here in America, there's, generally speaking, strict no-touching rules. You touch, you'll probably get your butt kicked by a bouncer. Not in Thailand. I'll tell you something. When I went to Thailand in 2008, woo, yeah, it's been 17 years since I've been there, and I haven't been able to stop thinking about it since, man. They will come up to you in the right place, mind you. Not the average person will do this. I went into a strip club in Thailand, and within 20 seconds of being through the door, I sat down with 2 girls, one on each side. One of them unzipped my pants. The other one put her hand in my pants. Yeah, and they began propositioning me. They were out of their mind. They knew I was American, so they were trying to gouge me. But I was polite. No thank you, ladies. No thank you, ladies. But that is not uncommon. But yeah, anyway, point being is traditional gender roles are alive and well in Thailand. Your expectations, the expectations of you as a man in a relationship, are exactly what they should be. And, listen, you want to get down to it. Relationships, whether you like it or not, relationships are transactional these days. A woman will leave you if she's not getting what she wants. Whatever those priorities are can vary. She will leave you if she's not getting what you want. In fact, we all do that. Right? Well, being that relationships will always be transactional, it's give and take, that's transactional. Whether or not you like the nomenclature I'm using, that's the truth. Let's just say, let's look at a relationship as an investment. It's easy to do. What you put in is what you should get out. How many of you, by a show of hands, how many of you get back what you put in? How many of you have had a solid return on investment, so to speak? How many of you are in miserable marriages? No, don't answer that. There are plenty. But the transactional value of a relationship with a Thai woman is vastly different than they are here in America. American women's priorities when it comes to relationships, by and large, are just off the deep end, ridiculous. Not in Thailand. Look, man, being that the dollar goes way farther, $1,000 spends like $5,000 over there. All right, take this into consideration. What all can you buy in a 7-Eleven here in America for $5? How much does a normal size bag of Doritos cost you? Doritos, pay me. About $5 or $6.99 a bag, right? So you ain't getting a bag of those from any 7-Eleven because they're usually more expensive. You can get a pack of M&Ms, maybe a bigger size, $2. How much is a 20-ounce soda going to cost you? Over $2 usually, even if it's $1. Okay, even if it's $1. You know what you can get for $5 in the 7-Eleven in Thailand? You can roughly get 2 20-ounce sodas, 3 or 4 of the smaller bags of chips, 2 or 3 things of candy, and a hot microwaved, what they call ham and cheese toasties. Now, if you have been to Thailand, you know exactly what I'm talking about. They are gold. They're so delicious, and you can't get them anywhere else. But anyway, your $5 goes way further. The point being is a woman needs you to be a provider. Okay, that's fair. Speak to my strengths, right? I can provide. Okay. And what am I getting back for my providing, which you already have a leg up on because everything there is so cheap. Everything's way cheaper. The average water bill, $2 or $3. The average electric bill for a 1-bedroom apartment, about $30. The average rent can vary anywhere from $100 a month for a 1-bedroom apartment to about $500, depending on where you're at. The more expensive ones are right on the beach. You can buy, instead of rent, you can buy condos in Thailand. As a foreigner, you can't own land, but you can own a home on that land, which is not a good idea, obviously, because somebody sells the land out from under you, you're just screwed. However, you can buy condos on the beach. Vietnam, Cambodia, Laos, and Thailand, all in that same area. Amongst those countries, I have found personally, you can find to purchase. You can find a shoebox. Okay, let's be real. A shoebox studio apartment, condo, you can buy to own for $5,000 to own it. I don't care how big of a home it is. Any home for $5,000, that's a deal. And some of those $5,000 condos are on the beach. Couple that with the fact that you can literally live on $2 a day when it comes to your food budget in many places. Like Thailand, for example. Now, you have to look for it. You certainly can spend a lot of money in Thailand because when everything is so cheap, it's easy to go crazy and be like, well, damn, I can get this, I can get that, I can get this, and then you end up spending the same amount of money that you would anyway. And then you get fat too. But you can literally eat out for cheaper than it is to cook food at home yourself while living in Thailand. Not like I compared to America. I mean in Thailand. You have to be frugal, but it can be done. You can live like a king on $1,000 a month, straight up. That's including if you're spending money on rent and you didn't buy a condo. Now, you can certainly spend way more for those condos, and I would encourage anyone to do so, because those cheap ones, they are literal a shoebox. But, yeah. So, let's take that into consideration. As a provider, what you're providing is pennies on the dollar. Now, what you're getting in return? Well, I don't think I can really say all of it on YouTube, but I will say that as long as you're a respectful human being, a Southeast Asian woman is more than capable of real, true love. Now, in my opinion, real love is always unconditional. People try to differentiate between unconditional love and love. Bro, if there's anything that would affect your love, it's conditional. Real love is always unconditional. You know, like the love I have for my son. My son could commit murder. And right or wrong, he's still my son. I don't care. I do not care. He could do one of the worst things imaginable, which I damn sure can't mention on YouTube. But it would not change the fact that I love my son. Blood's thicker than water. I'm sorry. You can expect that sort of love, real love, not unconditional, but real. And it's contradicted myself. What I'm saying is, bottom line is, Southeastern Asian women, they look at love realistically, as opposed to most American women. So your return on investment is through the roof. When you couple that with that investment being pennies on the dollar, it's big time, major league plus. So, yeah, that's my long-term goal. I'm moving to Thailand. I should have moved to Thailand already. I'm trying to bring my cat with me, and there's a lot of hoops to jump through on that. And I suffered a slight setback. I foolishly invested. I sold my house, and I foolishly invested very badly. And before I even got out of my house, I had lost the majority of my proceeds from the house. Because I bought a load of Bitcoin at I bought it at 95,000. So currently, where Bitcoin is sitting, with that sort of loss, I have that money locked up in staking pools, and I can't touch it even if I wanted to, because I locked it up for over a year. I wouldn't take it out if I could, because, you know, it's not a loss until you sell. Those losses are unrealized, and I'll be damned if I take the kind of loss that I would. I'm down. Let's say I'm down about $65,000. I'll be damned if I take that loss. I will let that sit in Bitcoin till the next 4-year cycle runs out. I don't care. That's why I'm technically homeless. So yeah, I did it to myself. I foolishly jumped in, but you know, it was already down from its all-time high. I was expecting the bull market not to be over. I was wrong. You won't hear me utter those words very often. But boy, was I wrong. So yeah, I will not make any predictions on Bitcoin that are not malleable, because it's a very, very, very volatile market, as we all know. Future's doing well. Yeah, that's it. That's my spiel for Thailand and return on investment. And when it comes to things like love, now I know what a lot of you are thinking. Little lady boys. Yes, it exists, man. It exists everywhere. It's just not all in your face and down your throat like it is here. Plus, the lady boys over there will not try and deceive you. It's not like you're going to pick up some hot chick, take her back to the hotel room, and she drops a 9-inch hammer. Typically that doesn't happen. They're very open about it. You start hitting on one of them, they will say, you know I'm a boy, right? If you know who Robert Frank is, Robert Frank! My son paid him on Fiverr to make a video where he talks to me about Thailand, and this very subject, it's in my videos. I put it on YouTube. It's pretty funny. In fact, I bet I can play it. I better not. Copyrights and whatnot. All right. Who's got a stock ticker symbol? Hey, do not pay attention to the dickhead who commented in my Rumble chat some garbage link. I'm about to block this piece of human garbage because they're likely not even here watching anyway. Oops. Why don't I do that on my time, since you guys are awesome enough to be here with me. I just love you so much for it. I love all you guys. I thank you so much for y'all being here. I really, really appreciate the support, and yeah. What are these jerks talking about now?
Also been rattled by AI disruptions, private credit worries, and now this escalating conflict in the Middle East. And underneath the surface, we have seen dramatic swings in stocks whipsawing. But at the index level, the S&P 500 actually hasn't done all that much. We're down about 1% this year. It actually notched the narrowest trading range to start a year since the 1960s. This is according to Barclays data. To make sense of it all, we have our friend Tom Thornton joining us. He is president and founder of Hedge Fund Telemetry. Tom, thank you so much for being here with us. We've been in this roughly 400-point range now for 4 or 5 months. What does it take us?
Let's go over to Yahoo. No, actually, no, everybody's in commercials. Why do they all go to commercials at the same time?
And that is sort of the cracks that happen before the big mega cap names give way. So we've had, narrowing of, let's say, participation. Semiconductors are doing great. You have NVIDIA, the largest weighting.
They will continue to do so.
Still doing fine. You have some cracks in the Mag 7. You have Microsoft down significantly off the highs. They're all actually down for the year. But still, I think that it's just a lot of positioning higher is my concern, because you've had a narrow range going nowhere, and you have expectations with investors thinking that stocks only go up.
Yeah, some complacency, right?
Well, I have to talk to you about private credit, because I just feel like it's getting sort of pushed to the back burner with all of our attention on Iran. And in many ways, the asset class is at a crossroads right now. It's really crunch time for private credit.
You've dropped spam in my chat, and I will forever ban you.
And Stanley, Cliffwater, just cap.
Now, if you have a channel that you'd like to discuss, and yeah, I'm totally for giving you some exposure, but do it the right way. Don't just drop a link in my chat and then dip. We can talk. We can talk. Let's be reasonable. We're human beings.
I want to start by talking about your experience, as I mentioned, overall, after being held hostage there by the Islamic Republic. For folks who are not familiar with that, can you kind of break down the situation and walk us through it?
Well, the former leader of the country of Iran, the Shah, was the leader of Iran for 26 years.
He's
Strong
dead.
ally of the United States, but it was a completely different world than the one
No.
we're living in now. It was in the midst of the Cold War. And so he was an ally in that important part of the world. Oil was very much more important to the United States, at least oil from the Mideast was much more important than it is now
Yeah.
from the Mideast, because we're, of course, much more energy independent.
Thank
I
you,
would
Donald
say
Trump.
that on November 4th, 1979, the Shah had just recently been admitted into the United States after being deposed by the founder of the Islamic Republic, the Ayatollah Khomeini. And
He's
he came to
dead.
the United States for medical treatment. President Carter allowed him in. He was a dying man. He was unable to fight for his survival in Iran. And the Iranians, particularly the Ayatollah, who was looking for a straw man, a kind of a diversion from what was really going on in his own country, they believed, or he told the people that he believed that the United States was going to attempt a counter coup to put the Shah back into power. He was a weakened man. That was never going to happen. It wasn't the reason at all. But the Iranians, they decided to violate every tenet of international law for multiple millennia by attacking an embassy, a diplomatic mission. They took over the embassy after we held out as Marine Guards and other personnel, military and diplomatic personnel, using our tear gas, delaying the Iranians' entry into the building so that we could destroy classified materials and top secret documents. Communications gear, and mid-morning is when the first Americans were captured. Early afternoon is when the last 10 of us were captured. The photo you have on the screen right now, I'm the one facing the wall. Of course, I didn't know that picture was being taken. I didn't even see that photo until about 7 or 8 years ago when a reporter showed that to me, and I was just amazed that it existed. The thing is, my treatment wasn't great by any means. But some of the men in that photo, Tom Ahern, spent 425 days in solitary confinement.
Ouch.
Bill Keogh lost 200 pounds on his
Ouch.
350-pound weight frame, 6'9" frame. Looked skeletal when we came back. The Iranians never brought a doctor in, never took him to a clinic. He died less than 2 years after we got out of captivity of Lou Gehrig's disease.
Womp
Colonel
womp.
Charles Scott,
Official
United
Trump
States
coin.
Army attaché at the embassy.
Should've seen that coming, guys.
A decorated soldier, served with valor in Vietnam.
Look, you can like or dislike Trump. It doesn't matter to me. But if you ever thought, look at this, the biggest loser of the day is Trump coin. Love Trump or not, everyone should have known that Trump coin was a joke. That was strictly to raise capital. Is it illegal? No. Is it unethical? That's not for me to say. But I'll tell you one thing. It just is. And, yeah, there's nothing illegal about it. Should it be? That's not for me to say. I kind of like the Wild West aspect of crypto. Is everyone familiar with Picoin? This is that coin that you mine on your phone, right? That they took years to finally release and put on chain. And they finally did, and it died. It was like $2, now it's 25 cents. How long ago? Yeah, just last year. Just last year. Is this a good buy? Hell no. Do I have some? Hell yeah. In fact, I had locked mine up to where I couldn't touch it and I couldn't sell it at the time. Wow, it's on a tear up. That's good. But yeah, I had mine in lockup in the staking pools, and it's currently locked up for the next 2 years. So I'm just going to wait until the next Bitcoin halving cycle. And it'll run up again. I think I have like 2,000 of these Pi coins. So, yeah. If you if you just download the app and you mine coins on your phone and you shut the app out, you shut the app down, you don't have to keep it running. Is it kind of annoying to have to re-click on mine every 24 hours? Sure. But free money's free money, whether you believe in it or not. Right, Samsung Electronics. I pulled this up because I happen to very much believe in Samsung as a company. They are doing a lot of wonderful, profitable things lately. Don't ask me to name any of those things, but it's about what you could expect. This is not the Samsung I was... Yeah, this is their South Korean Samsung, excuse me. Let me get back to the American market. Oh, wow. Really? Huh. You're telling me they don't have an American ticker? Really? Huh. You could have fooled me, baby. Wow. Okay. Mind blown. I did not know that. But I mean, yes. It's a foreign company. It's Japanese probably or Korean, but these companies can still establish themselves on our exchanges as well as their own. All right. Well, that takes the wind out of why I brought it up. I pulled up an IPO calendar so we can see what companies are coming soon. MDA Space, huh? Pay. Freecast. What is Freecast? Let's take a look, shall we? Okay. Well, yes, I wasn't trying to pull up the company. I know it's not listed. Okay, well, I guess they ain't pulling shit up on that. I don't typically go for IPOs just because I find it to be stupid. Getting in on the ground level on a company, unless it's a killer company that I really believe in, you're not going to find me jumping on any IPOs because the value of that stock is nowhere near reality on opening day. You got to let that shit simmer. You can day trade and make some cash. That's always an option, but not me. Uranium Energy Corporation. They just recently came around. March 9th. Let's see. Uranium Energy Corp. Nice standardized name. Not doing so well. Well, over the last 10 years, they are... What? Well, they just IPO'd, but they've been around for a while. Damn. Really? What? You're telling me this company's been around since 2006 or 7? They just now IPO'd? I mean, you want to raise capital. That's what you do. Achieved strong financial results with premium uranium sales, robust liquidity, and no debt, while advancing key production and conversion projects. Regulatory approvals are pending for new capacity, and policy momentum supports further growth. They've had $66 million in revenue, and they're worth almost $7 billion. What? No. No. They must own a lot of real estate. Ouch. Look at that net income. Negative. Ouch. I won't pretend to know what all of this type of stuff means, but I do know a little bit. Learning is a constant process, is it not? Anybody drop me a ticker symbol. Let me pull something up. Yeah, the official Grim Child on YouTube. You got so much crypto tabs on. What are you talking about? These aren't crypto tabs. I got Bitcoin up. I got all kinds of information up. These aren't charts. It's information, baby. These are earning reports, calendar when their earnings are coming out. Bumble. I don't get a dating site. I don't get a dating site stock. Why anybody should care about investing in dating. I mean, you know, at the end of the day, the name of the game is money, of course. Don't get me wrong. That's not lost on me. But I just find it a funny setup that a dating company would be on the stock market to begin with. You know, that's just funny to me. Battalion Oil. Congratulations if you invested in Battalion Oil. You made a pretty sweet 20% just by holding. That's not to mention the possibility of any options you may have played. Let's go over to the news and see what this guy's saying.
The market's down another 1.25%. How is their retirement portfolio going to withstand these types of things that are going on right now? It's definitely these are things that people are concerned about.
And my last question here before I let you go, I wanted to pop up kind of the field right here because we know that it is a crowded field of Republicans who are looking to hold on to this Wisconsin House seat there. Of course, one of 5 is you right there at the bottom left. But I wanted to ask you, because President Trump has essentially endorsed another candidate, have you been in touch with him? Does that make you feel a certain way? Break that down for me.
Well, Mr. Alfonso is the 26-year-old son-in-law of Transportation Secretary Sean Duffy. Sean Duffy used to be the congressman here. In fact, Sean was the first congressman, Republican congressman, to represent this district in over 42 years. And I celebrated Sean's election because I worked on the election. I've been in the Republican trenches for 43 years of going door to door and opening up my checkbook and serving as chairman of our county party for 20 of the last 40 years and as the county party treasurer. All party leaders are volunteers and members are volunteers. We pay our $20 to join our local county parties. And yes, it wasn't a big surprise that Mr. Alfonso was going to get the endorsement because of his father-in-law's connections to the president. But the endorsement that all the candidates are really looking for, especially me, is the endorsement from my neighbors, the people who I've gotten to know best and have seen me sponsor honor flights and have seen me participate in junior achievement banquets and have seen me at church and at fish fries. And the neighbors of each of us are going to know whether or not they know us and whether we can best do the job. And that's
all right. I am going to go to Schwab.
I'm trying to pick the pocket of another, quantitative in nature. But overall, I think there's some positive accumulation, I guess is what I'm trying to say, within the technology sector. And again, you know, the sensitive areas, the areas that have gained so much, it's an easy place to sell because, you know, it's easy to sell a lot of NVIDIA or Micron stock to garner liquidity, gain liquidity. Because again, just looking at 10-year yields higher today, that tells me that there's appetite for liquidity. So you're rolling out a short, long duration bonds into short. So again, you know, liquidation is occurring within the tech sector. And the other thing is too, you know, risk spreads in the high yield market too, irrespective of the stocks in these areas have been moving down year to date. So I talk about this too.
What's up, Bubba Frog?
You know, private.
Thanks for joining us. Shout out to Bubba Frog. How you doing, buddy? What would you like me to check out? You got anything in mind?
Assets and liabilities or balance sheets in the banks are tied together. So you can't just sequester private credit and isolate it on its own. It's not. It's tied into tied into the broader financial system.
Yeah, no, it's good. It's a good distinction, and I think that it's important to put it into context with that. I mean, it seems to be sort of a broad sector type of concern right now. George, really appreciate it. Thanks so much for getting us across all of that this morning.
Thank you for subscribing.
Let's turn to the price action overseas now. European stocks under pressure.
Do me a favor and hit that like button. I would greatly appreciate it.
Investors in the region remain on edge amid a repricing of oil and rate expectations. European banks have had a tough week as well. JP Morgan cautioning European lenders like HSBC and Standard Chartered are among the most exposed to the Middle East conflict, potentially pressuring earnings and not helping the mood today. The Trump administration announcing new trade probes into the European Union as well as China, Japan, India and a number of Southeast Asian economies too. BMW saying it expects earnings to be hit this year from a combination of those tariffs, higher input costs and competition in China.
Okay,
The company has
interesting.
been trying to reduce expenses to help some of that profitability. But some good news for Tesla in China. Sales recovering in the country last month, even as government subsidies faded and people celebrated the Lunar New Year. The company reporting a 91% jump from a low base last year after a 45% drop the previous month. Tesla has continued to try to incentivize buyers with attractive financing plans, and the jump in sales comes as the broader EV market in China looked sluggish last month. But Elon Musk's cars still face competition from local rivals like BYD and NIO, which has turned profitable on record sales.
Finally.
Currently trading down at 2.5%. Alongside its Mag 7 peers today. Coming up, it's
NIO.
time for Inside Out. We'll take a closer
God,
look
I
at
haven't
Dick's
heard-
Sporting's goods.
I haven't heard anybody talk about NIO in a couple of years.
Morning Trade Live returns.
Why don't we pull NIO up, shall we? Just for tits and giggles. I mean, okay, cool. Oh yeah. Huh. Oh yeah. Oh yeah. That's not bad. Yeah, it's not bad. It's not bad. Not bad. Looks like we're having another little run there. Yeah, yeah. Are we at an all-time high? I do not know. Let's see. I do believe we are at an all-time high on NIO, or pushing it. Oh yeah, a word of caution. As far as my trading signals are concerned, you see these short and long entry trading signals? They do not apply to everything you might see them on here on my stream. Simply because you cannot make these trades on certain securities in here. Some aren't securities, and that's why you can't trade them. So understand that. I could turn them off, but I would turn them off on everything. So I just leave it up there. And I assume that you guys have the intellectual fortitude to know that, but you never know. Figured I would mention it. Palantir running around pretty good so far today. Hey man, looks like our stock heat map's greening up a little bit. That's good. That's awesome. They were just talking about how it was sucking it pretty hard. Check out the Russell. All right. Finance doing great. Consumer non-durables doing great. Health, mixed bag. Retail trade, mixed bag. Tech, mixed bag. Electronics, mostly red. Producer manufacturing, mostly red. Energy. We don't even have to go there. Let's check out the Dow Jones. Looking good, looking good. Looking better, not good, but better. Still overall red for the day, or for the last 24 hours, as is everything else. So it looks like on the short term, we're making, as a whole, we are making a little bit of a recovery. But market's only been open for, what? Almost an hour and a half. Damn, I didn't realize it was already almost 11. Anybody got anything for me?
Especially with, energy prices rising, which digs into typically discretionary spending.
So that's one area. The second area is how to virtualize and create a digital twin for these intelligent systems. And the third is agentic AI and the progress we're making there. And the reason for these key investments is to address the engineering complexity and challenges and how to imagine and the engineering future for our customer.
What are you hearing from your customers about, I know it's early days, right? You've just announced this stuff. But do you feel like that they're ready to pull the trigger on many of these products? Or are they waiting for a little more, sort of proof points about how they can use them?
On the silicon semiconductor side, we're so close with...
Views are particularly overstated, we
Women.
think. If you take a look...
They can't stop talking about dicks.
Investment. So we collaborate very closely with them to solve the challenges.
They just can't do it.
2-3 years out as they deliver these products. So on the semiconductor side, we know exactly the big challenges that our customers are facing as they're delivering the most.
Going to the Fox News, not, I hate to call it Fox News because some people have an aversion to Fox News. This is not Fox News, even though it's owned by Fox. This is their Live Now network.
Permission because we have no
I'm
other
going
choice.
to pull up
but we
another.
are doing everything we can to be accurate. And so far, we've had great success in our campaign in Iran. But whenever we don't have an incident that went according to planning, we investigated, learned from it, own up to it. But what we're seeing on the other side, Iran is purposely targeting civilians as a strategy. You know that sadly almost 50 people were killed from June and this war right now, all of them civilians. There was one soldier who was home on vacation. The Iranian regime, most of their fires directed towards the center of big cities at the center of mass population, and they're using cluster bomb, which is a war crime when directed towards civilians. They are purposely targeting our civilians, and they are purposely using weapons that target civilians, and that's part of their strategy.
And I wanted to pop up this video right here. This is coming in from northern Israel. Can you kind of explain this situation as that barrage of missiles, dozens upon dozens, were fired by Hezbollah? Because a lot of people think it's Iran firing the missiles. Now, it's important to note as well that Hezbollah is an Iran-backed terror group. But tell me about the situation that we're looking at right there on your screen.
Well, Hezbollah, as you said, they're an extension of Iran in Lebanon, fighting for the Iranian regime and not for the interests of the Lebanese people. And they decided to carry out attacks against us. It looks like science fiction what we're seeing, but this is actually the result of many years of cooperation producing technology, joint production by Israel and America, working side by side. And we had indications they were planning this large attack against us. We were ready defensively, as you're seeing on screen, to intercept most of those rockets fired from Hezbollah towards our civilians. And also we were ready offensively. As they were starting that wave of fire towards Israel, we started taking out those people launching the rockets, even in real time, even the actual people who were trying to fire rockets, and we were able to thwart a much larger attack by Hezbollah.
And I also want to talk a little bit about some of the disinformation and misinformation out there.
Which there's plenty of.
One piece of disinformation or misinformation that you, as part of the IDF, want to make sure is clarified for folks out there, whether they're watching from the U.S., Israel, or anywhere in the world?
Well, I want to say one thing. I've been hearing some journalists and some people on social media try to show like there's any light of day between Israel and the United States of America. And I can tell you from where I'm sitting and being part of conversations and meetings within the IDF, this is the most intimate joint operation we've ever been in history with any other army, all the way from the highest generals to the pilots speaking to each other, joint mission, shared values. And sadly, we share the same enemy that says death to Israel, death to America. And when they say death to America, they say death to Israel. But
over 100 bills signed into law in 22 states by our organization in the last 4 years. And so
I do like large holes.
Lieutenant Colonel, thank you so much for taking the time to join us here. We appreciate your time, as I know you have a lot going on. Anything we missed, anything that you want to make sure to add here before I let you go?
Is very important to your group, as is keeping LGBTQ
to speak about this Iranian regime
gender.
And note that it's not just a threat to Israel or just a threat to America. In the last 13 days, they've fired hundreds of ballistic missiles and UAVs towards other countries in the region.
They sure
including
have.
2 European countries.
They've
been firing towards NATO members. This Iranian regime is a threat for the stability of the entire region and the entire world. And this region will be a much better place when this operation is all said and done.
Yes, sir. I just pulled up Newsmax just because I wanted to add another source.
That representative yesterday, that's what she was mad about, that we support school choice when she was lashing out at us in that
school choice. We'll come back to them.
A message that was delivered not by the new supreme leader himself.
If nobody has any objection, I'm going to go run and have a smoke, if that's okay with you guys, unless anybody's got something they'd like me to pull up. I'm going to go have me a smoke, and when I come back, I'm going to do a recap of the day when I get back. I love you guys for being here. Please drop a like and make sure you're subscribed. I love you in the mouth. I'm going to leave you with some news. I'll be right back, guys. I got to refill my coffee, too.
English, so we were not able to bring it to you. No translation there. However, if that changes, we'll bring it to you in full here on Live Now from Fox, but that was not the case. We are going to head to our final 2-minute commercial break, but a lot more live coverage coming up in just a few. Stay with us here on Live Now from Fox. Welcome back here on Live Now from Fox. We are approaching the top of the hour on this Thursday, 10:58 on the East Coast and 7:58 on the West Coast. My name is Josh Breslow, and I've been here with you for the past hour or so. What we're going to do is head back to this hearing that is underway. It is a Senate committee hearing talking all about U.S. and Euro Command, but there's a lot of it related to the situation with Iran that is ongoing. We're going to pop up the audio on that. Now, on the other side of that, my colleague Ryan Schmelz will be right here in the hot seat with everything you need to know on this Thursday.
Senator. Okay. General Reed, thanks also for being here. I appreciate what you've done at Transcom and just a heroic effort leading up to Epic Fury. Talk about some of the numbers, if you will, some of the success stories so far, and then where are the gaps where Congress can assist?
Thank you, Senator. Some of the success is the ability to generate the aircraft to actually get on the move. And so I'm grateful to the Congress for the sustained funding for weapon system sustainment and spares. Because of that, we're able to keep pace, and we've been doing that extremely well, so thank you for that. Other success stories is the fact that we've been able to establish a network for aeromedical evacuation in order to bring home the wounded and to also get them to a higher level of care.
Thank you. What concerns does Transcom have regarding Chinese and Russian naval deployments and commercial investments in ports across the globe?
For the Russian deployments, we monitor those. We maintain an awareness of where they're going and make assessments in terms of what capabilities they may be seeking. When it comes to the Chinese fleet deployments, we do the exact same, but we also go one step further to track their footprint, infrastructure, and what types of things that they put in place, mainly in seaports. So we keep a very close eye on their electronic systems, cranes, and that type of thing. We work with port authorities to make sure that we know where those are, and then we operate in ways to circumvent that.
So at this point, General Reed, are those adversaries, are they limiting your ability at Transcom to enable logistics around the globe?
Currently, they are not. We plan for that.
Thank you. General Grinkowicz, how is our air domain awareness in the Russia-Ukraine conflict throughout EUCOM?
Senator, we have a robust set of agreements with allies and partners that we stitch together a very comprehensive air picture. Certainly, it's not perfect, but I'm very confident that we're on the right path to make it better. But we do have very good awareness, particularly in and around Ukraine.
I'm concerned about the uncertainty around the purchase of the E-7 Wedgetail. That's affecting our NATO partners who also canceled E-7 orders last November. What's your thoughts on this platform in terms of current and future EUCOM needs?
Yeah, Senator, I've seen the capabilities of the E-7 in action in previous jobs, particularly for low radar cross-section platforms, things like the UASs. It's an incredibly capable platform for detecting those.
They had canceled orders, though. Any concern there?
Senator, I am concerned. On the alliance side, the E-3 fleet is aging. It's about 50% combat effective, as many of the aircraft are in depot. The alliance does need a replacement aircraft. The E-7 was the plan for a while, but now we're looking at other options based on affordability and who is purchasing the E-7. Depending on where the United States goes, considering the E-7 in the future, it may be back on the table or it may not, but we're looking at it closely.
Thank you, Chairman.
Thank you very much. Senator Hirono.
Thank you, Mr. Chairman. General Grinkowicz noted that the Russian people are probably not given accurate information on Russia's war against Ukraine. So I do think that it is very important for the American people to know what is happening with regard to Iran. So before I begin my questions, I'd like to take a moment to highlight for the American people the cost of this president's reckless decision to take our country into war with Iran without congressional authorization. 7 brave U.S. service members have been killed, 150 wounded, 8 severely injured, over $11 billion in the first 6 days, and this is day 13. So we're likely closer to $20 billion already spent on this, what I would consider an illegal war, with no end in sight and no plan for what will come next. Oil prices are going up. As noted, the major beneficiary of this is Russia. And despite how impressive and professional our military is, this is a real war. It is not a game. It is certainly not an excursion. And it is important, even if the president won't, to acknowledge when errors happen. Preliminary findings of the strike on an elementary school in Iran that killed 175 civilians, mostly children, point to U.S. responsibility. But this tragedy didn't happen in a vacuum. Secretary Higgs said in his misguided attempt to focus on lethality, gutted the office that focuses on mitigating civilian casualties, reducing personnel there from 200 people to less than 40. In that kind of an environment, errors can occur, and as noted once again by General Grinkovich, what may have happened in the instance of the killing of all these school children as just a error upon error, a chain of errors, as he put it. So we mourn the deaths of our brave soldiers, but as this war continues, there will be more civilian deaths. There will be more cost to our American families. I joined all those who pray that this war will end, even if there is really no articulated end in sight. I'd like to start my questions with General Reed. It was nice to meet with you the other day. And Transcom is playing a vital role supporting this war in Iran, even though, as I noted, I totally disagree with the president's decision to launch this war. That said, this war is placing significant demands on our acknowledged aging air mobility and refueling fleets, both of which need to be recapitalized. I'm also concerned this war is going to impact Transcom's ability to support important planned exercises and training in other theaters, particularly in the Indo-Pacific. General Reed, have you had to cancel or scale back any planned Transcom exercises with Indo-PACOM because of this war?
Senator, since the start of the war, we have certainly surged to meet the need of CENTCOM. One of the things we've been able to do is to get access to greater numbers of Guard and Reserve to assist with that. In addition, access to Guard and Reserve also helps to preserve our ability to support other combatant commanders as well, to include exercises in the Pacific. And in addition to that, we also work with the Joint Staff to make sure that as the needs arise, that we can meet the needs as best we can while we support the warfight.
So you're telling me that as this war against Iran continues, that you are needing to make adjustments with regard to any needs, particularly in Indo-PACOM, because we have a lot of exercises that are really important with our allies in that part of the world. So you are having to make adjustments. Will you commit to informing this committee if Transcom is unable to fully support upcoming exercise in Indo-PACOM or other combatant commands?
Yes, Senator.
For General Grinkovich, one of the United States' greatest asymmetric, I'm running out of time. Mr. Chairman, may I finish my question?
Yes, ma'am.
I did want to get your sense that we are stronger when we work closely with our international partners. And would you agree, General, that this requires constant investment in interoperability and training as technology and threats evolve? Would you agree with that?
Senator, I would, and we focus on that every single day at U.S.-European Command.
There's a whole series of questions that follows our need to maintain that kind of interoperability, and I will submit those questions as well as others for the record.
We'll take another round if necessary, and of course there'll be a classified portion. Senator Slotkin is next.
Thank you, Mr. Chairman. Thanks to both of you for being here, and thanks for all you're doing to support the significant effort that's going on in the Middle East. It's hard, as someone who was at the Pentagon and at the CIA, it's hard to miss, I think, two important trends that are happening in this war in the Middle East that are connected, I think, to what you all do. One is just, I feel like the conversation on drones has come home to roost. You know, the Pentagon over many administrations, Democrat and Republican, has had this unbelievably glacially slow process of acquisition. And so even though we know that the drones we build are big and expensive and take 2 years to build and they're $30 million and you can buy them off Amazon, we just haven't been able to get them into the doctrine, into the force in a serious way. And now I feel like, unfortunately, we're paying the price for that. This is a different chapter in American warfare with the Shahed drones from Iran killing American forces, hitting U.S. embassies, hitting civilian targets, and I think 11 other countries, evading our air defenses, which are set up for much bigger projectiles. And then we've had, I think, according to press reports, 11 MQ-9s downed in the course of 2 weeks. The Iranians are figuring out how to bleed us with money and with time, to the point where we now have Ukrainian advisors coming from Ukraine to train us, right? Because they're the experts. And I just, it's not for either of you two to respond to, but I just feel like, you know, we need to understand that warfare has fundamentally changed. And if Iran is able to hold us at bay and continue that power projection, you know, we keep hearing that the reason why, or one of the reasons why we went to this war is because of Iran's power projection. They're now holding the Persian Gulf at bay. We can't move ships through it. And they're able to use low-cost drones, $20,000 to $50,000 each, to kill U.S. forces. So I hope this is in a moment of inflection for the Pentagon, for all of us, that unless we understand how to more quickly get our acquisition system to be responsive, we're going to continue to lose our soldiers. And I hope that's a major lesson that we're all learning. The second one is the role of Iran, Russia, and China in supporting Iran. And I know we can't talk about it in an open setting, but there's press reports that the Russians are helping target U.S. ships and aircraft. And I just hope we can all be on the same page. And certainly in Europe, you understand the threat of Russia, that if Russia is helping to kill U.S. forces, we have crossed a Rubicon. We are in another moment, and that we have to take decisive action on that. And instead, we're giving them breaks on oil. They're making a ton of money. And all the weapons and all the systems that we need for this war are what we would have otherwise given Ukraine to defend themselves. So I just hope we're all on the same page on this committee on a bipartisan basis, that the situation with drones in this war and the situation with Russia in helping to potentially kill American forces and target our weapons and our systems, our ships, they are new. And we need to adjust to that new reality. Can you just tell me in my last minute here, General Grinkovich, I'm concerned that we're going to lose a lot of capabilities out of Europe, and then this administration's never going to put them back in. Can you talk about the importance of capability in Europe?
Yes, Senator, thanks. I think having capability in Europe ultimately provides options for this administration or any administration in the event of a conflict. And, you know, I would highlight that in my opening statement, I talked about one of the missions of U.S. European Command is to serve as a power projection platform. And so it is having capabilities in Europe, munitions in Europe that allow us to help U.S. Africa Command to target terrorists in Africa, or to help U.S. Central Command as they execute Operation Epic Fury. And so, you know, the distances are shorter, it's less expensive, and it's much easier to project power with our network of bases and allies.
I would just say American power is still important, and deterrence is the best option, and the way we do that is with capabilities. If anyone thinks that Vladimir Putin is deterred when we leave Europe, I would love to sell them a bridge. Thanks very much. I yield back.
Thank you, Senator Slotkin. Senator Banks.
You've been listening to a Senator. I love you guys. I love you guys hanging out, allowing me to go have a smoke. You guys are awesome, really. Like that's just awesome. You guys are still chilling, while I stepped away. I mean, that's just so cool. I don't know why I think it's so cool, but it is. Thank you. I love you guys. I'd love you even more if you hit that like button. All right. Looks like the dollar's plowing up. You know what? It's not going to necessarily be a good thing if it crosses that 100 mark. It damn sure is not good for silver, as expected, or Bitcoin for that for that matter. Oil. What did I tell you, man? What did I tell you? Right around here is when I said this would be a good buy. And it doesn't take a genius to figure that out. I'm not tooting my own horn. This was a no-brainer, guys. I hope you all are making some money off of this. It's about the best thing in the market to play with at the moment, if you ask me. Unless you wanted to short some of these other things that are dying. Mixed bag, huh? It's a mixed bag for the day. Clear out some of these here tabs. Palantir. Palantir looking like it's having an okay day. Neo sideways. I want to check on Nvidia because I've got calls on Nvidia. Yeah, I'm pretty sure they are shit. Yep. I wish I could have gotten in on this oil spike. Damn it, I wish I could have gotten in on it. But as you can't see, I linked my Coinbase account to TradingView, and I am not entirely sure how to pull it back up. I get that damn song stuck in my head. I didn't get rid of it. Why? Where are you, baby? Where are you? If anybody knows how the hell I can pull up my Coinbase position, like, I don't have a position at the moment, but it still was at the bottom and it would show me my balance or whatever. Buy, sell buttons. Huh. Yeah, I don't. I wish I knew. I wish I was better versed in this program. TradingView is so awesome. I fucking love this program. I absolutely love this program. Quick search. Coinbase. I know I'm not in the right place. Here we go. Coinbase Advanced. There it is. Look at this. You can link all these accounts. You can link if you have accounts with, let me get rid of it so I can pull this back up. Okay. As much as I love TradingView, it kind of pisses me off sometimes because being so complicated, I suppose, comes with its difficulty. I sure would love to buy one of these. Yes, I would buy it right now, even though it's gone up. You're damn right I would. If I could, but I can't, so I ain't. So let's step in this bitch out here. Oh, yeah. God damn it. Watch out there now. Anybody know that song? Okay, here we go. Connect another broker. Look at this. You can connect so many brokerages. Webull, Bitstamp. Oh, Gemini. Tasty Trade. Webull again. Forex. Ninja Trader. What's up, my ninja? Moo. OKX. And then, of course, your paper trading so you can pretend and learn. That's a great way to learn, by the way. I highly encourage everybody to always do some paper trading. Just to, you'll learn. You learn exactly the same way. You learn by your mistakes. You learn exactly the same way. Making mistakes with paper trading. It just doesn't cost you money. So what a brilliant thing to do. To have available. Yeah, a whole lot of nothing. Yeah, I would love to make me a tasty trade. That ain't happening until I'm waiting on a transfer, and it is just taking its sweet time. It's probably going to take a while. I'm kind of upside down, being technically homeless as I am. Shout out to the wonderful woman who's allowing me to stay here in her house rent-free and allowing me to blow her internet out. She's got a cap on her bandwidth every month. I think it's like something like 500 gigs of transfer, and I blew it out by like 7 terabytes. Added $100 onto her bill. Did I make $100 streaming on YouTube and Rumble? Absolutely not. So not a very good ROI, am I right? But hey, you gotta spend money to make money, right? So yeah, I would love to make a trade so I could make some profit and have something to give her. But live and learn. Losing my ass a couple months ago really taught me a hell of a lesson. Whew, God. Tends to happen when you lose, $65,000-ish. I could just bash my head into a wall. I could. I really could. All right. Bitcoin looks like it's trying to creep its way back up. Silver taking a nosedive because of the dollar doing so fantabulous well. It's performing well, but it's not necessarily a good thing. Heat map looking red and flat. All of the areas you would expect to be doing well, I should say. Let's see. The top performing U.S. stocks of the day. Let's see who the big wieners are. Whoops. There we go. Whoo! Siebel's Bruce Group up 5,000,000%. Congratulations. If you had any of this stupid stock. Where's the gains? Huh? It's up that much. What are you talking about? What are you talking about, TradingView? Am I missing something? Check out Armstrong Holdings. Oh, actually, you know what? Beneficial Holdings. I've heard of these guys. Look at these moves. Oh, penny stock. I have not heard of these guys. I take it back. Some of these I'm unsure as to why they show such a change in gains, but it's not reflected in the actual stock. Guaranteed we're going to have a tokenized stock show up in this here list of wieners. All right. Well, let's take a look at the biggest losers. Ouch. You know what? I think it's better when you're looking for wieners and losers. It is best to go in through this way in markets, because they filter out some of the nonsense. The S&P down 1.25%, NASDAQ down over 1.5%, Dow down almost 1.5%, small caps down 2%, composite down almost 2%, the dollar's up almost 0.5%, volatility is up. You can bet that. Volatility is through the roof. It's true to roof. That is largely because of, you guessed it, of a war. I wonder what Iran's currency is doing right now. Oh, it's sucking it, I'm sure. I'm not even going to bother because I don't care. Nvidia down almost 2%. Apple down 2%. Look at these drops. Amazon, Alphabet, Tesla, Microsoft, Johnson & Johnson, JP Morgan Chase, Procter & Gamble. Everybody's sucking it. Highest volume, of course, Nvidia. Most volatile, Roma Green. Palantir, lots of volume today. SanDisk, they've been hitting it hard lately. I've been seeing them in the news a lot. All right, there we go. Tilly's, the wiener of the day. We'll open that up. Bumble, Petco. Biggest losers, Incanix Healthcare, Stone Ridge. Nobody I really recognize. Let's pull that one up. Take a look at Tilly's. Okay, the volume is up. Wow, look at that. Bang! It damn near doubled. It exactly, almost exactly doubled. And then it softened back up. Now, you remember what I was telling you about RSI closer to the beginning of the morning? When it's way up here in the 80s like this right, Sean? Look at that. It ran up, damn, into the 90s. That means it is coming down soon. Then it crossed the average. As soon as it crosses this line, it instantly starts. This yellow line acts as kind of like a magnet, right? It's going to start slowing down what it's doing, as you can see. And then that drags the average down. And when they get close to meeting, that's around when you're going to see a move in one direction or the other, right? All right. Well, congratulations if you bought any Tilly's before today, or even, yeah, before today. Now, the biggest loser of the day, Incanix Healthcare. Incanix. Ouch. From almost $6, wow, it lost almost half its value. Ouch. Look at that. And this looks like a sure sign of good growth. You know, when it runs up and then it consolidates, that's solid. And then it runs up some more. Little flag, run up, little flag. Look at that. Those are just perfect flags. And it was doing well. I wonder why it fell so sharply when it was consolidating after a good, decent run. A couple of them. Interesting. Well, if you owned any Incanix Healthcare, I'm so sorry. I feel for you. If anybody has any significant wins they want to brag about, drop them in the chat, man. I'd love to celebrate with you. I love it when I love it when people make money, man. I'm not one of these punks that gets jealous and mad when somebody else does well. If you make a lot of money, baby, good for you. Good for you. Keep doing it. But yeah, drop some of your wins in the chat. Looks like we've got several companies that are busting out with earnings today after market. Stone Ridge, BIM, Burlesic, Magazol. That's another country, ain't it? Vibra Energia, Forestania. Don't recognize any of those. Our IPO calendar looks like OGX, Rise Nano, PayPay, MDA Space. PayPay, I can't remember where I heard about them, but I know I heard something recently. Crypto overall staying okay. The thing about this is our next point of contention for Bitcoin is going to be around the $73, $74 range. Okay. Once Bitcoin approaches that, if it approaches that, when it runs up to about the $73,000, $74,000 mark, which it very well could, that is a very hard line. That is a strong point of resistance. Let's see, is it even in here? No, it won't show until we get up a little higher. However, if it gets up there, it is highly, highly plausible that it will come down. That would be a very good short position. Because if it loses 74,000, because that's, resistance becomes support. If it doesn't hold above that $74,000 mark-ish, then it will come crashing down. Most likely, it's going to come down into the 60 range, somewhere in the mid-60s, probably below this. If it cannot hold that $74, it'll plow through all these lines right here. And we will be looking at